And welcome to the Traders Corner Investors Summit Roadmap to Trading Success. I'm Anthony Chapman, and I'll be your host throughout today's powerful lineup of expert presentations. We're thrilled to have you with us, whether you're a new trader looking for your first breakthrough or a seasoned pro refining your edge. Today's sessions are packed with proven strategies and practical tools to help you capitalize on this exciting market environment. Interest rate cuts are in motion, volatility is back, and with the S&P 500 at all-time highs, the opportunities ahead are massive if you have the right strategy. This is your chance to learn from some of the sharpest minds in trading live in real time. So let's kick things off with Price Headley, founder of BigTrends.com and a member of the Traders Hall of Fame. Price will reveal a focused option strategy built around one of the most liquid stocks on the planet, Tesla. You'll learn 3 gap patterns that trigger high probability setups, a moving average filter to confirm trends, and how overnight holds can deliver quick results. So please welcome Price.
Thank you, Anthony. Good morning, everybody. I'm thrilled to kick off the Traders Corner. Excellent lineup of fellow speakers and traders, and happy to have you with us. You know, it's all about continuing education, so you're in the right place to, continue to take in more information and see what fits with your own personal trading and investing preferences, right? Everything's about kind of a lot of choices you could be making, and the question is kind of what fits with what you're looking to accomplish. At BigTrends.com, which I founded over 25 years ago, basically, we've always been about creating edges in trading. And one of the great edges is focusing on individual active names, as Anthony said. Of course, Tesla, one of the most active optionable names out there. And we've got a Tesla options trader strategy I want to teach you about today that looks for quick doubles from one afternoon's entry to the next trading day, never holding more than a full 24 hours from one afternoon to the next, but at the same time, never having a day trade. So it's kind of an ideal sweet spot for quick strike opportunities with Tesla. And of course, a lot of people know Tesla as, their founder, Elon Musk, have been one of the more controversial figures of late in the fact of his helping fund President Trump's campaign, coming in with pro-Trump and then falling out with Trump, was seen shaking hands with Trump this past week in Arizona. So he's kind of been all over the board when it comes to at least his contact with the president. But the reality is, of course, that's made Tesla a more volatile stock. A lot of people think of Tesla as a electric vehicle car company, but really Tesla is not trading on that. It's really trading, in my opinion, on the future of robotics. That, talk about robots in homes and businesses in ways that we can basically automate things that are tasks that then free us up as human beings to do a lot higher value tasks in our view. And so bottom line is that I think Tesla is more of a robotics trade at this point. Regardless, it moves a lot, right? So if you think, oh, I don't want to trade a controversial stock or options on a controversial stock, you're missing out on the point that the controversy is what creates the opportunity, both on the upside and at times on the downside, right? So you've got to be positioned to say, if you're trading something that never had any controversy, never had any change, like a CD in a bank, you get 4% for your CD trouble, or lack of trouble, right? We're looking for a lot more than that. We're looking for doubles and sometimes more on just even overnight gaps. So we're going to walk you through how this strategy works. Let's get right into it. I like to keep it fast paced, but still go deep because we can focus on just one vehicle at a time here with Tesla. Remember that the information provided in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. Just keep it purely an educational bent here and say, look, it's about realizing that, yeah, we are attracted to the stock and options trading, have large potential rewards, but let's face it, they also have large potential risks. We've got to manage both sides of the coin. We'll talk about how we do that for our Tesla options traders. Remember that any past performance we talk about, past performance of any trading system or method, is not necessarily indicative of its future results. Future results are going to vary. But I believe what makes us a popular choice for traders is that basically we consistently execute our signals. We constantly tell you, we're getting in here, we're getting out there. We never leave our traders hanging. So that way you always know what to do. Win, lose, or draw, you've always got to clean up and move on, whether it's a trade that worked or a trade that didn't fire. Clean it up, moving on to the next opportunity. Don't get stuck holding something and hoping. Hope is not a strategy. So we're going to talk about how we use weekly options with Tesla. Of course, it's one of the beautiful things. And in my 35 years of options trading plus, You know, back in the day, it used to be only you had a 1 month out option as your main choice. And then I was like, hey, why don't you guys come up with weekly options? They came out with weekly options back in the early 2000s. I said, hey, why not come out with daily options? And now you're seeing daily options starting to come out on some of the big indexes like the S&P and the QQQ. Maybe it'll eventually be one day where we'll have dailies on names like Tesla as well. But right now we have weeklies. Every Friday is an expiration Friday. Doesn't mean we're going to trade them into that expiration day. Okay, we're not doing that here. We're not zero DT, 0 days expiration traders. We want to give our subscribers enough runway to catch a quick pop, but also to cut and run with time left in your option if it didn't fire, right? Whether it worked or didn't, there's time left. We're always out before the expiration day. So I'm going to show you tactics I've learned in 3.5 decades of trading options experience, and then, you know, walk through these setup patterns and give you an overview of how you can start taking advantage of this Tesla only trading strategy and get the trades as soon as, actually, since it's a weekend, it would be as early as Monday afternoon would be our next potential entry windows. But good to have some time away from the market that's currently trading and not trading on the weekend here, and say, let's kind of take a step back, get ready to go for the next week and beyond. If you don't know me, I've been trading options and stocks for 36 years now. Launched BigTrends.com nearly 26 years ago in November of '99. And it was always, back then, everybody's preaching day trading as the path to wealth. And you hear a lot about, like I said, zero DTE, 0 days expiration. Everybody's so hyper short-term focused, going for the maximum leverage. I don't think you have to go for maximum. You can still get healthy leverage, but reduce your risk dramatically by not taking it right into an expiration day, in my opinion. So it's all about a systematic approach. I'm going to show you some of these setups and systems and how we put them to work for our Tesla options traders. Let's go right into a past winning trade example, and then we'll go into more. This is one just from a couple weeks back on Tesla. Now, you know, like I said, Tesla has been controversial, right? That, you know, Elon Musk is always seems to be in the news, making headlines, right? And he's the richest man in the world, right? We're talking about, like, what is it, $450 billion or something of net wealth. So the bottom line is that, you know, it's pretty insane, right, to be in that kind of a position. Well, guess what? Here's an example where you saw Tesla coming in to a, in this case, this was a Friday afternoon signal back on September 12th. So just a couple of weeks ago. And you say, oh man, you missed it. Look, it's rallied up. We've got a moving average in light blue here. On our bull trades, we've got to be above that moving average. For bear trades, we've got to be below it, right? So you can see, generally speaking here, that we would not be taking bear trades. Even when it tried to break down here back at the start of September, remember the market got weak on the jobs data, and you say, question mark here, should we get out and get into a bear trade? We weren't really seeing the follow through in terms of that candle momentum there, right? What does a candle momentum show? If you follow candlesticks, the red candles show you that we're closing below where we opened. That's obviously some day-to-day weak momentum. The white open body candles that are the green, surrounded by the green lines there, are the positive closes versus the open, right? So we're getting powerful closes higher here, and as we got into this signal and said, okay, why are we buying into a call option there? This is on a Friday afternoon, and on a Friday, Thursday or a Friday, actually, we'll buy the next Friday's weekly expirations. If we're earlier in the week, we can buy the same Friday's expiration because we know we're not going to take it into the Friday expiration day. So this is on a Friday, and September 12th, we were buying the following Friday, September 19th options, and we're buying the 405 calls. Notice where Tesla is trading near the end of the day here on this black circle. It's trading here just under 400, maybe like 397. You say, hold on, so you're buying a week out, and you're buying the 405 strike calls, buying about 7 points or 8 points out of the money, and you're paying $725. That's $725 to control one contract that controls 100 shares of stock. 100 shares of stock would have cost you just under 40 grand. So you say, okay, so that's a lot of time value by a lot of people's standards to pay. Our view is that we know we're not going to hold it past the upcoming Monday's close, right? So we are holding it into a weekend. Guess what news came out a couple weekends ago? It came out that Elon Musk himself was buying a bunch of Tesla stock. He had been buying up something like another $1 billion worth of stock in Tesla. You know, drop in the bucket for him maybe, but a significant sign. You know, I often say when you see insiders buying, there's one reason why insiders buy. It's to make money on the stock. They think the stock is a relative value. Insiders sell for a lot of reasons. You've seen Bill Gates and Jeff Bezos and a lot of others sell stock steadily, and even Jensen Huang, it's NVIDIA selling stock now consistently, right? As part of their estate plan. Doesn't mean that they're bearish on their company's longer term outlook. It's just basically that they're gradually creating some extra cash, and they put out these plans to say we're gonna sell a steady amount. That doesn't necessarily mean that that's bearish for those stocks, but there's one reason why insiders are buying, and in particular the founder, co-founder and head of the company here is buying, to thinking that the stock's going higher, right? So guess what happens Monday morning? The stock gaps up, and you can see come Monday morning it went from about 397, and you see we opened here in the neighborhood of about 423. We ended up closing about that same level, by the way. We sold it right off of that open there. And notice we were targeting a double on these trades. Sometimes you get lucky and it makes you, in this case, much more than a double. Okay, this is an outlier. You should not expect this to be the case. Usually it's trading from a 50% gain, 70% gain, 80, 90, then it gets to 100. At 100, we just take the whole position out. And in these examples, we're assuming, say you put in $2,000 a trade. You could put in less, you could put in more. And these, say you put in $2,000 a trade, you get 2 contracts. Couldn't quite get 3 contracts here. I would put you over 2,000. So 2 contracts in for $1,450. When we cash them out for more than a triple, we're cashing out each contract at $2,450, right? So each contract's making us $1,725 or $3,450 on 2 contracts, a 237.9% gain, right? Again, that's an outlier. Gaps can go both ways, right? Gaps can help you. They can also hurt you. If we hit what's our stop loss? Our stop loss is if we hit a 50% loss, or if it gaps past that even, we would take it out. So 50% stop loss is what we're working with on the other side, right? We feel like taking a 50% loss, if you lose half of your proceeds on a trade, you should cut and run. That can be more than overcome by stocks and option trades that double or better. In this case, we were more than twice our normal double target here at 237+%. So the point is that that's a pattern of strength that you want to align yourself with. If you tend to feel like you want to call tops, pick tops, and bet on the downside when stocks have run up, or if you see a stock downtrending and you want to call a bottom, in my opinion, you should first goal should be to start retraining yourself. It's really hard to do that. I remember seeing John Bollinger at a Market Technicians conference many years ago, and he said that his mentor told him that he was only allowed to call the exact top and the exact bottom once in his trading career. And he realized, he's like, that's not very good probabilities to play that game. So let's align ourselves with the trend. Think about it. You and I, as individual traders and investors, do not drive the market. Let's first get real humble and say we are not driving the market. And even any one institution will acknowledge, if they're smart, that nobody is really, quote, driving the market individually, right? Everybody thinks there's some grand conspiracy at work or some grand thing going on, but the reality is there's a whole lot of different players out there. Some are making bullish bets, some are making bearish bets. The combination of all those buying and selling influences is what shows up on the chart as what's the pattern, right? And so guess what? When you're seeing this kind of strength, you're just getting the psychology of the technical price action chart here, is that there's a lot of buying happening here. And anybody who's on the wrong side of that, who's selling this short, who's betting that it's going to come back down, is probably running to cover, that is, buy back their short positions, which just adds to the buying power if they're on the wrong side. Let's face it, institutions are just like you and me as individuals. They want more of what's working and less of what's not, right? So you get this sort of running for the exits for the bears. You get bulls pouring on the gas, and you see momentum that can kind of become self-perpetuating and continue from a day-to-day basis. Now, thankfully, we're not trying to predict where Tesla's going to be a week from now, a month from now, a year from now, or a decade from now, right? I'm not playing that game. I'm playing the game of let's find the short-term momentum pattern and let's profit from it with short-term options. So when we can stack these up into doubles, or sometimes better than that, we know that, and then manage our risk, we can, I believe, have a meaningful edge over a longer sample of trades. But you cannot look at ever piling in all your money into one trade and then not taking another signal. You've got to be consistent in your capital allocation. That's really the first objective for new subscribers coming in. I always tell new subscribers, either watching it comfortable with what winners and losers look like, or start with even a contract at a time, just to get your toe in the water and get the experience of what a winner feels like and looks like, and what a loser looks like, and how those stack up over time, so you're comfortable with the system. You want to look at it as a system you can follow for the longer haul, not just a quick get-rich-quick scheme, right? That's not our goal. Our goal is, think of it as a longer-term systematic approach to how you can execute these strategies. So point being that we're not going to hold it more than 24 hours, and yet we'll never have a day trade. Why? Because we're looking at daily charts here, and we're looking to get in the last half hour or so of the trading day. Okay, so why do we do that? Because we want to know that the daily chart pattern on those candles I just showed you, combined with our moving average filters and everything else, is setting up for an appropriate signal into the close. Right? If we act too quickly on that, say it looks like it's gapping up off the open and then it reverses down by the close, we could actually be on the wrong side of the momentum going into the next day. That's not what we want, right? We want to focus on that last bit of action on a day-to-day basis. So we're looking at not just one pattern. We're looking at actually 3 different price action patterns, factoring in how much the stock is gapping, whether to the upside or the downside, and we're only focusing on the daily chart. I don't like to go to intraday charts with this strategy. Why? You think if you're trading short-term options, wouldn't you want to use a real short-term chart? My problem with short-term charts, generally speaking, is that the noise level goes up, right? So noise is your enemy as a trend trader, right? If you see a trend in motion and then you get whipsawed out by a little bit of interbar noise, that's not going to help you to execute and stay with your big trend signals, right? So we want to focus on those short-term options. We're only buying a call if we're betting on the upside. We're only buying a put if we're betting on the downside. And let me ask you real quick, because we got a great crowd coming in with this. How long have you traded options? If you've never traded an option in your chat box, type in the number 0. I'm not going to name names. I just like to see numbers of how many years people trade. If you trade them for 20 years, type a 20, and that way you kind of get a sense for how much people have traded options before. And if you're new to it, don't sweat it. We're all about helping new traders to get in and start to learn how to execute a system consistently. We've got a 15-year trader, so great to have you with us as well to say, look, in addition to new traders, that basically, okay, that, yeah, 3-year trader, that basically 5-year trader, the idea being that, okay, you've traded for a while, you understand how leverage works with options in terms of how it can help you, but leverage is a double-edged sword. It can also hurt you, right? Options are often called a zero-sum game. For every winner, there's a loser, right? The idea, because of course, market makers' job that's filling your option orders, their job is typically to stay relatively hedged and not take on big positions with the crowd or against the crowd, right? They're trying to basically, when you buy an option, they sell you the option and they try to go hedge it by going and buying Tesla stock in this example. So that's not really their concern. So it's basically like if you're buying it, somebody else is typically selling it. So if it's not the market maker. So anyway, point being that we use either this week's expiration, if it's early in the week, like if we get a signal on Monday, we may or may not, but if we do, we would be buying this coming Friday's expiration early in the week. Late in the week, we would buy the next Friday's expiration. We love the daily chart, and we only therefore have one action point per day. I don't know about you, but if you've day traded or you've traded short-term intraday charts where you're constantly monitoring the markets, that's very time consuming. It can be kind of mentally exhausting. I've done it and I've experienced both the good and the bad sides of that very hyper short-term focus, is that it can be very exhausting because what you're doing is you're having a lot of decisions that you potentially have to make each and every trading day. Here, we only have one decision to make per trading day. That to me is a lot simpler, a lot easier, a lot less taxing mentally. In addition to just the time usage, you get the bulk of your time back. I don't know about you, but as I get more trips around the sun, of course, they say that the years get shorter, right, as we get older, right? The idea being that I want to enjoy life more. I want to be able to not have as much stress. I want to be able to just take advantage of systems that give me an edge, but not have to make that many decisions on a day-to-day basis. Okay, so that makes your job and our job a lot easier. Say one time per day, we're looking right before the 3:30 p.m. action point, saying, how's that daily candle and bar shaping up? Is it giving us what looks like an end of day signal? Is it not? And if it is, we're ready to fire. If it's not, we say, okay, we pass, wait for the next trading day at the same time in the last half hour of the trading day, right? So that gives us a really focused window to scan, to minimize our time and to minimize the noise that we might otherwise incur on a day-to-day basis. That also allows us to still take advantage of the power of these weekly options, right? Because of course you're paying less premium for an option that's going to expire this coming Friday than you would for an option that's going to expire a month from now or 3 months from now or a year from now, right? So the more time you buy, the more you have to pay for that option. all their factors being the same. And so the idea of this is that, okay, we're going to get that kind of sweet spot leverage point, and if we're wrong, we're going to have one of two things happen. So I'm not just talking about if we're right, I'm saying, what if we're wrong? You know, we are going to be wrong on some trades we win, some trades we lose. It's part of the game. And what if the stock doesn't move at all? Well, then we don't get a profit target or a price stop. We're still getting out the next trading day at that 3:30 p.m. exit window. We call that a time stop. So the window of time will close out our trade the following trading afternoon. So we'll still get plenty of trades with this method and plenty of profit opportunities and still be able to manage risk. So the beauty of weekly options is, of course, you get a lot of bang for your buck for a relatively small investment. Like we said, you know, Tesla right now, it closed right on that 440 strike, give or take a few pennies. So that means that 100 shares of Tesla would cost you 44 grand right now. Okay, we're controlling that 44 grand for oftentimes around 500 bucks. You can see our average contract price going back to the beginning of 2023 is just $559, meaning $559 to control each 100 shares of Tesla, right? So if you're putting $1,000 in on average per trade, that gets you one contract. If you're putting $2,000 in, that gets you 3 contracts on average for about just under $1,680 off of 3 contracts invested on that kind of an average price point. So of course, as you average more money at each trade, then of course you can get more of your full allocation relative to that kind of a price point. But I want you starting small and building your confidence, letting the system show you how it works, not just taking my word for it. Because the big thing is to get you aligned with how the reward and the risk work and something that you can stick with. We will always get out of the trades the next trading day, at the latest at 3:30 p.m. Eastern, if we have not gotten our price target or our stop loss. So this avoids you getting stuck in a slow-moving trade. It avoids you getting stuck in hope mode. Anytime you sense that you're hoping in a trade, you need to basically dial it back. You need to say either I'm trading too large, maybe I've gotten into a losing position that I'm hoping is going to come back. That basically, those are just not strategies. Those are just basically emotions starting to take over your trading. You should ideally get to, speaking of robotics and Tesla being a leader in robotics of the future, we believe that basically the idea is that, you know, you need to get into that more emotion-free zone when you're trading and just saying your job is to execute your system. So that's what a lot of people come to us for, is to say, okay, we've got the system. All you have to do is execute it. It's not platform dependent either. You can use any options trading platform that you like to use. We call it the system signals via real-time email alert, and you can also get them as a text alert to your smartphone. I recommend getting both of those delivery methods. So when you get signed up, you start with an email. We send you information on how you can set up the text alerts as well at no additional charge from us, where you just saying, okay, look, it's just about just take advantage of these signals as they come in, when to get in, when to get out. You say, why should you care? I'm not cherry picking here. We look back over time since the beginning of 2023 through today on all closed trades. Now this assumes that you started with a $25,000 portfolio with $5,000 a trade. You can do it with a lot less. But just to give you an example of like, okay, that went from 25,000 to 122,000 in the past under 3 years, right? But the idea is that, remember, past performance cannot guarantee future results. You can't assume the next 3 years are going to be this same result. They're going to vary. They could be better than this. They could be worse than this. But what will not change is our determination for all of our subscribers to Tesla Options Trader to follow the system. Tell you when to get in, tell you when to get out. What's great about that look back, though, is that we didn't compound the amount invested per trade. We stay with a fixed maximum of 5,000 a trade. So yeah, when we started, that was 20% of the portfolio per trade. We'll never hold more than one trade open at a time with this service. You got most of your money in cash, even when you've got a new trade working. But you see, as it grew over 6 figures, then that 5K per trade is under 5%, almost 4% per trade. That's gross, of course, before subscription investment, before commissions. But as you know, commissions have come down dramatically. So what if, you know, when you, and here's the same numbers, but just shown the 25 growing a $97,000 gross profit before commissions, before subscription investment. That's that same fixed 5,000 a trade, reminding you that past performance will not guarantee the future. Future is going to vary, but look at the smaller amount. So say, hey, I want to trade it smaller. Well, what if you start with a $5,000 model portfolio? By the way, even though we don't have any day trades here, one of the great proposals that just came out this past week, you may be familiar with the pattern day trader rule that says that if you've got smaller than a $25,000 account and you do, 4 day trades in a 5 consecutive day span, they will require you to put in more money into your account to get over a $25,000 threshold. That's called the pattern day trader rule. That rule is being proposed to be taken down from $25,000 to only $2,000. That rule has been in place since the beginning of the 2000s. After the internet bubble popped in 2001, that rule was put into place. And so guess what? This is going to lead to a huge explosion in small accounts, quick trades, in my opinion. And because that rule has prevented that for the last 25 years. So 24 years. So the bottom line of this is that that's going to add, I believe, to the volatility, add to the interest, add to the growth in the options market as well, in my opinion. But keep an eye on that. But in the meantime, don't sweat it here. We're not doing day trades. We're still going to stay with the no day trade plan here. To say, let's get in late in the afternoon. Earliest we could be out is the next morning, another calendar day later. But you see, so you don't quite get your full allocation into all these trades when you put in just $1,000 a trade on a $5,000 model portfolio and stay with that fixed thousand. The 5K portfolio grew to 19,500 gross, 14,500 gross profit before the commissions and the subscription investment, 291% gross return before those things in the past, 2 3/4 years. Again, reminding you, past performance cannot guarantee the future results. Future is going to vary, but we'll stay consistent in executing. So whether you trade small or trade large, there's lots of potential here. But of course, we've got to always keep the risk level in mind. But the beauty here is that we never use more than a fixed $1,000 a trade, even as the portfolio grew. So it actually means as you grow your portfolio, your risk going in each trade as a percentage of your portfolio is actually dropping as your portfolio rises, because you're staying with a fixed $1,000 maximum. So just another way to manage your risk. Don't try to compound your winnings and then end up getting whacked even harder after a run up when you put in too much on the next trades, right, and get a pullback. So we want to keep you stable, not just financially, but psychologically, keep you stable, keep you in the game for the long haul. So like I said, we've got several setups, 3 different price action patterns we're looking at based on gaps in the stock of Tesla and also the candlestick features and momentum. So, as I mentioned, the 2 of these patterns are bullish. 1 of them is bearish. We're going to show you those. And guess what? If we don't see one of those 3 patterns, then we don't take any action. So we're not going to trade every day. We're going to pick our spots. We're going to be disciplined about only taking trades when we have a meaningful edge. We're oftentimes looking back at 10 years or more of data, and in Tesla's case, back to its IPO. So a number of years ago. So point being that I can't give away the exact settings, but I can give you the principles here. When you become a subscriber, though, you get all the settings. It's not a black box. Part of our terms and conditions are that you know that it's for your own benefit. You're not to share it with anybody else. But first filter is that get on the right side of the simple moving average, which is basically looking back at the recent trends over recent weeks, right? We're not looking at too long of a moving average, not too short of one, but something as a sweet spot to tell us, okay, what's the general pattern of Tesla? Is it generally moving up? Is it generally moving down? You do not want to fight that trend line, right? So you'll see on all these charts, we have that light blue moving average trend line, and you'll see that that's going to be our first guide to say, get in tune with that. So even when you're doing quick from one day to the next trades, that you're still keeping in mind the bigger picture trend that's been developing with Tesla stock. Then we'll look at the individual candle by candle price action to determine if they're giving us a bullish or bearish confirmation. For bearish trades, when we're buying puts, we actually need some extra confirmation, because you may have noticed that when, as the saying goes, when the stock like Tesla is going up, it takes the escalator up, but when it goes down, it takes the elevator down, right? Those drops can happen a lot faster, and that gets people excited about the potential on puts. But the problem is that they don't happen as frequently, right? When they happen, they're really quick and dramatic, but when they don't happen, you're stuck kind of holding, and it's not happening. So you got to really have some really fine-tuned criteria to catch those potential elevators down when you do get a bearish opportunity. Let's look at some more trade examples so you can get the visual. So right away, when you look at this chart, before I even mark it up here, which direction are we trading likely, right? The moving average is, you can see it's trending up. Most of these candles are above there, and you can see that we're looking for that positive momentum. Remember, the first example I showed you, we entered back here at the end of the day on Friday, the 12th of September, but in this one we got in the day before as well. So we did hop in at the end of the day on 9/11. By the way, 9/11 is an anniversary of that, of course. World Trade Center tragedy has turned into a seasonally pretty positive day for stocks in the U.S. Seems like there's almost a patriotic buying bias that seems to show up. Something to remember as you look into future 9/11s. But bottom line is that we were getting our signal at the end of the day on 9/11 on this one. You can see that we bought it over $5. It was $5.84 to buy the 377.5 strike calls that were going to expire on that Thursday. We're not going to buy the next day. We're going to buy the following Friday, the 19th expiration on 9/11 at the end of the day. So we're still almost 10 points out of the money there, right? Because we're having to buy like an option that's going to have 6 more trading days to go before it hits its expiration. The very next day, that 584 turns into 1170, gets us our double target. So if you're putting in $2,000 worth, that gets you 3 contracts in for, you can see here, about $1,752, and you can see that we end up making $1,758 when we cash it out at 1170. Notice what Tesla stock did. It went from 10 points out of the money to about 10 points in the money, right? And so at 377.5 call, now it hits as high as 388 or so, and of course that means it's worth about $10.50 intrinsically. And of course it's still got time premium. So, but the time premium will diminish as you go more and more in the money. So we're out at 1170, and we're happy to take the double on about a 20-point move, or roughly what, 6%, 5 or 6% move in Tesla gets us 100%. So it's still like only like a what, maybe an 18-to-1 leverage ratio. That's not massive, but it's plenty to still get a healthy pop for a double from one trading afternoon to the next trading day, right? And like I said, then we got back in again to a new trade at the end of the day on the 12th that we cashed out for that more than triple then on that following Monday. So the point being that we're taking advantage of both of those strong power momentum candles there to go with our moving average filter and take advantage of it. Now you can see here, you can see where we're kind of bumping around back the month before in August and at the start of September. Remember, the market gap down to start off September, right? And like I said, we would not take this trade when it's finishing back up and we're hovering right around the moving average on that next bar up. We're slightly below about the close. So we're still in wait and see mode there. But then we hop in right here at the end of the day on September the 4th. Now Tesla's trading here in the neighborhood of about 338. You can see we're typically buying a little bit out of the money. We're about 1% out of the money here. And you say, okay, that's in this case happening here on September the 4th. We're buying out. That's the Thursday the 4th, and we're buying out to the following Friday the 12th, right? So we're still doing that same about 6 trading days out, but we liked how it had been below the moving average, but then finishing back above it, closing up near the highs of that particular daily candle. That's a nice, what some people call a tail on that, where you've got this kind of attempt to take it down here at the bottom, but then we finish up with a check mark up near the top here, and that's good positive momentum into the close. And so we're betting that we're going to get upside follow through in that case. And oh, by the way, we did also gap up. There's a little gap up happening there. You can see we want to see that gap up as well. So point being that there's a variety of little filters here, but you see we paid $595. So on 3 contracts, that gets you in for like $1,785. The next day it gaps open, right? We've been at 338. We gap open at 348. We're up $10 or about 3% right away, but it trades all the way to about 356 intraday. Again, that means that 342.5 call intrinsically is worth as much as 13.5. We're out intraday before that high at 1190 when we get our double target. We never try to sell part of our position and then keep holding. We always say, let's go ahead and focus on taking advantage of the double. When we get the bird in the hand of the double, we take the whole double out, and we're happy with that. We don't get greedy. If it keeps going to more, that's fine. There's always room for profit for others too. Now let's talk about a put example. And now you see that we're well below our moving average filter in blue there, right? So now we're trending down. We don't have to be heroes and catch it right away on the breakdown. We want to see certain patterns. You can see in this case, it was also gapping down, and as we not only see from where we had closed the prior day there, big G gap down and big momentum down. So basically the run for the exits is basically happening that the institutions are driving that, right? And so we want to just get a piece of that. This is in a prior phase. You can see the stock at a lower level here. It's basically in 228-ish, and we're buying just a hair out of the money. This is one of the splits. So like 226 and 2/3 was our strike price. And then you see we're paying 405 for it. Next day, it gaps down. It had been at 228. It opens at 220, trades to 217. Those get to about $10 intrinsically, but we're out at 850 for a little better than 100% right off of that gap down, 109.8%. So it's that same pattern in reverse. And not all of them are going to get to their target. Sometimes you'll get a time stop. In this case, you say we paid a little bit more, right? And here's an interesting one, because you say, well, why would you get into a put trade here when it looks like it's closing back up? Well, you can see it had gapped down, finished lower as well, even though it comes back up and you've got that tail, that it's still showing you that we're getting that downside momentum. We're below our moving average filter. Everything's still set up for, we believe, more downside. So when we're near 375, we're buying again, about 2% of the money, 367.5 straight puts, paid 965 for it, right? So we will never pay, by the way, more than 10 or $1,000 per contract, right? So even if you started with $1,000 allocation, when you do start trading it, when you become a subscriber, that would at least get you one contract here. In this example, that contract would make you $410 on each contract, because we cashed out the next afternoon. We don't get to our almost what, $19-ish price target. We get the $13.75 late in the day, and we just said cash in. Sure, it kept on going later. We can always re-enter and get another entry thereafter, but we will keep on basically giving ourselves a little bit more time typically, or adjusting our strike price, rather than just holding the one we've got if we didn't get to a double. We just took the 42.5% gain and went to the exit. Another bear example you can see here, you say, man, that was a nasty looking candle. It closed right near the end of the day. It had also gapped down earlier, and we're of course well below our trend line in blue, right? So we're getting in there late in that day, about this is back in a prior phase, 162-ish, buying the near the money 162.5 put, paying 380, and then it gaps down, trades a lot lower all the way to 154, making those options worth 8.5. We were already out at our double target, 765 for 101%. So again, you'll see these where they'll keep going. I don't care if they keep going, right? We were taking it out somewhere in here, probably around these, near these lows here, and then it snaps back up. You're glad when you do that and then it snaps back up that you've just gotten your money back at a double and gotten back to the sidelines. But we did re-enter here, and here's one that now the volatility expanded, right? It had been getting tanked for several days. We get back in at 150. We buy a pretty well of the money 143 put, paid 395. Yes, it goes down the next day, but not enough, and we get about $100 profit a contract, or 25% gain on the whole position, right? So the point is that you're not always going to score doubles, right? You're going to have times where you make less. You're going to also have times where it doesn't get the gain you look for, and then it just stops you out at the end of the day, or even intraday. At the worst case for us on our stop level at 50%, the only thing that can make it worse is if it gaps against us. So that's why we're trying to get that momentum going into the close in our favor, so that those gaps are more likely to be in our favor than against us. That's the objective. Now you can see, based on this test options trader strategy, we've been finding an average of about 7 new trades per month. Remember, it's about 21 trading days a month, so that's about a third of the time we expect to get these signals. Sometimes we'll get back-to-back trade examples. This was an unusual one where we just kept coming back to the well, both before the presidential election last November and after it. So you can see, before the election, we told subscribers, hey, this is a higher risk trade, you know, and it's interesting to me, because you look at this and you say, hold on, you're getting in on the first day up after you've had basically 6 down days in a row here, right? And we would not take any one of those 6 down day trades. Why? Because you were above the blue moving average filter. Now the momentum kicks in your favor, starts to go up right in front of the election. We say, yes, near 250 is the time to buy. We bought the 262.5 calls with the positive reversal back up, moving average filter in our favor, paid 475, right? So if you bought $2,000 worth, that gets you 4 contracts in, and then you get the gap up on the big E election reaction, right? That gap up, it rallies all the way up here to off of the gap open to a 397% gain. That's an outlier, right? We don't expect that. And we also knew that was a higher risk trade and told subscribers, we're taking this, it's a higher risk trade, just be aware of it. With the election results are like an earnings report, right? Got to be aware of that. But then we came back into it at the end of the day after that election reaction, rebought. Now we're buying, after that big score, we got the 290 calls in, 525, doubled them the next day to 10.5 bucks. Came back in again that day, right? The momentum is positive into every close right there. And so we come back and buy it again, 101% gain on that next big pop up there. It goes as high as 330. We're out obviously, but well before that. But then look, we've got another signal and it's about to gap up for an even better than double yet again as it got that follow through into the next Monday. And it closed the prior day at just above 320. We bought the 337.5 calls and it opens up at 345 plus, right? So really big pop up, trades as high as 358, but we're out soon off of the open there at 248%. So those are rare to get that many trades back to back to back to back, but they can happen, right? If you see that kind of power trend, you want to be taking advantage of that. And the beauty is, okay, even if you do then eventually hit one that reverses on you, hits a 50% stop, you can see how when you can stack up gains in your favor, you've got the ability to stomach the occasional one that finally reverses. You can't play the, well, this one's finally going to reverse, I'm not trading that one. You got to just take every signal. Let's look what a losing trade looks like. Here's one where actually it was above our moving average filter. It had reversed back up. Looked like it had good momentum to bet on a reversal back just under 250, about the 247.5 calls for 570. We've got our stop in there at a 50% loss, and it does gap down and keep trading down to where it's going to trigger our stop out to about a 51% loss there. Each contract you bought in that case would have cost you 290 bucks, right? $290 loss per contract. It's part of the game. It's going to happen. So you have to just kind of realize that that's part of it, but think about it. If you can get doubles versus 50% stops, if you're putting in $1,000 in each trade, say you can get a full 1,000 and committed, you make 1,000, then you lose 500, make 1,000, lose 500. Obviously it's not going to be that exact in how we do it, but the idea is that still puts the odds in your favor of winning twice of what you're risking on a typical profit target versus a stop. And again, you look at this and say trades that gap past our target. Here's another one that popped back up. We caught it on that positive reversal, right? We didn't try to call a top. We didn't trade any of those downside red candles. We just caught it back up. Makes 148%. So again, just reminding you, we talked about it earlier. We'll kind of zip through it since I've only got a couple more minutes left here. But you see, the idea is that we're looking to rinse and repeat. We're looking to keep doing that, remembering that past performance doesn't guarantee future results. Future results are going to vary, but our job is to get you the signals when to get in, when to get out in real time whenever we get a new fresh Tesla options trade. So what I've set up for this Traders Corner has been so good to me is a super special for you to just try it out for 3 months. So what you get is you actually, even for this, I don't do free trials. You've got to have a little skin in the game, but you're going to see it's a very tiny amount of commitment I'm asking for you to just get you to start to engage with the system and start to learn it here and start taking advantage of the ups and the downs in Tesla here. We're going to give you the same thing we get to longer term subscribers. You're going to get the settings and rules. You're going to get the weekly video training from me. You're going to get dedicated access to me and my analyst team. Anytime you got a question as you learn the Tesla options trader system. By the way, you don't have to go deep dive and learn it all. A lot of people do want to learn it, but some other people want to just give me the trades and give me the effective opportunities that it creates over a longer sample of trades, right? If you're buying it off of my website at bigtrends.com, you'd pay $297 a month times 3 months. You'd pay $891 for a 3-month try it out offer. What I've set up for you here today is a super special. I'll take that $891 down by more than $700 off, about 80% off, take it down to only $177. The reason I like that price point, I was thinking, well, that's like a 90-day trial. Try it out for the next 90 days for basically less than $2 per day. And so you go to that link at bigtrends.com/corner, and you'll see that this page, we've set it up for you that's already taken that discount into effect. So no other discounts can be applied. And on our order pages are really clean and simple. I'm a big believer in the KISS principle. You want to keep it simple in your trading. You want to keep it simple in your execution, keep it simple here in your ordering as well. You can see that the simplest way for me, it's a secure page. You can get your payment info in there, but do it that way. Make sure you get your email in correctly if you're doing it that way, or you can review our terms and conditions and agree to that. And if you do it on that page, hit the green button, or the easiest way is to click that review terms and conditions, click that box, and then click on through the orange PayPal link. A few clicks later, you've locked in a 3-month access for only $177. I am out of time. If you got any questions, you can call us on that page, our 800 Big Trends number, or email my customer service team there, clientcare@bigtrends.com. I want to give it back to Anthony so he can get ready for our next great speaker and trader. And thank you, Anthony, for having me. It's always a pleasure to be with you on these Traders Corner awesome educational events.
Hey, Thank you so much, Price. That was fantastic insight into Tesla options trading. Traders, we've placed Price's special offer link in the chat box, so be sure to check it out. Now let's keep things moving. Up next is Alla Plocher, developer of Alpha Fibonacci trading method and founder of the Fibonacci Trading Institute. Her presentation titled How Alpha Fibonacci Predictive Precision Will Improve Your Trading. Alla is going to show you how her predictive system eliminates the guesswork from trading. Whether you trade stocks, futures, or Forex, this is a unique chance to learn precise rules-based entries and exits used globally since 2011. So thank you, Alla, and thanks for being here. It's all yours.
Good morning, Tony. Good morning, Traders Corner. Good morning, everyone, on this beautiful Saturday morning. Thank you so much for being here. Please confirm that you can see my screen. Tony? Anthony, is everybody hearing me, please? I'm speaking up. I cannot hear any responses.
Yes.
Hello.
Can you hear me?
I can hear you. Can you hear me?
Yes, I can see your screen as well. It looks like we're getting some responses in. The audience looks like they could see your screen as well.
Okay, fantastic. So one moment, please. Let me just post a link to the website and we will start with much more information to come. Good morning, traders. It is my joy and honor to present how predictive, precise, and simple Alpha Fibonacci method can improve your trading. But first, let's remember extremely important part. Nothing in this webinar constitutes a financial advice. No student had ever been paid for their testimonial. Past performance does not guarantee future results. And I hope you trade with risks you personally can afford. All software and systems shown without any guarantees. This is a required disclaimer. So let's move forward with what you will be learning in this webinar. We will cover how Alpha Fibonacci predictive, precise, simple system has been traded by traders of all levels, from beginners to hedge fund managers, in US and globally since 2011. You will see how children of my students trading the system in US and globally. You will witness how Alpha Fibonacci system and software identifies precise entry stops and targets across all instruments. You will witness how you can remove pain and speculation from trading with precise and predictive Alpha Fibonacci simplicity. And most importantly, how you can join us with a very special bootcamp offer with savings up to $10,000. Briefly about myself, I arrived to US as a refugee from Ukraine with degree in classical concert piano. But of course, I could not make a living as concert pianist without any English, so I went back to college in a medical field, and my very first work was Johns Hopkins for many, many years, where I worked with top psychiatrists, top doctors on the planet, where I witnessed the power of human brain, which I continuously bring to my traders. I continue being licensed in brain health and human psychology, and this is crucial key component of all of my work. 2004, I became obsessed with Fibonacci, and it's been 21 years since I've been developing my own systems, as I will show you a glimpse into my work, and you will be blown away what I do every single day. I continue developing proprietary Alpha Fibonacci strategies. It is my passion teaching it to traders all over the world. I continue saying no to top financial institutions, including Goldman Sachs, as you will see emails from Goldman next, as I share to my students daily what I receive from top financial institutions. I choose to teach online, choosing to live anywhere in the world where I choose, And since 2011, I've been teaching my own proprietary method in live on-client classes at Fibonacci Trading Institute. I launched Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, where students share their stories from 12 to 80 plus years old. So traders all over the world trading proprietary system across all instruments, all time frames, all platforms. And that's the reason I live and breathe what I do, because when I discovered that pure price is exactly the same across all instruments and Fibonacci forms all markets into precise puzzle, let's do the test. Because this is the part that blew me away 21 years ago. Here's very, very simple test for everyone. If I bring pure price to the traders, no one knows what this is. No one. What is very, very clear, this is pure price. But no one knows. No one can name what this is. No one has a clue. So I was absolutely blown away 21 years ago when I recognized, oh my goodness, this is all the same. Pure price on S&P mini future 5-minute chart is identical to pure price on micro Nasdaq, to pure price on Bitcoin, to pure price on Euro, to pure price on any chart. So when you're trading alpha Fibonacci system, you're trading pure. You are not confined to single instrument. You are not blocking pure price. If today you decide to trade S&P, tomorrow you can trade Nasdaq, and you can trade Bitcoin, and you can trade Tesla, and you can trade any instrument, any time frame you choose. And that's the reason I receive recognition at top financial institutions on the planet. And of course, everyone knows Goldman Sachs. So until the day Goldman Sachs would allow me to work from anywhere in the world I will choose, my only answer is no. I choose freedom. I live and breathe what I do for this very reason. I keep asking myself, what would my life be like if I said yes 15 years ago? I wouldn't have Emmanuel and Jennifer as my dearest friends for life. Emmanuel brought his wife to the courts. They both became full-time traders in Canada. I wouldn't have Richard, who retired trading alpha Fibonacci system, as you can hear on podcasts. I wouldn't be flying all over the world, meeting Ken in London, who built and making a brand new movie about Fibonacci Trading Institute. I wouldn't be speaking with William, who's been with me for 15 years, and we met multiple times in New York, in California, and very, very dear friend who put his daughter, Sam, through Harvard, trading alpha Fibonacci system in Syria during war. All of this on my podcast channel, and I keep being invited to weddings of my students, including last year in India. And when I'm meeting Victor in Dubai and in Germany, who is trading alpha Fibonacci on Forex, and Michael in California, this is the reason I live and breathe what I do. And I'm truly blessed and honored to be here with you this morning. So when fathers bring in their children, husbands bring in their wives, brothers bring in their brothers, friends bring in their friends to Fibonacci Trading Institute to trade proprietary alpha Fibonacci system across all instruments, all time frames, all platforms. This is a stunning reminder of simplicity. Dominic is my dearest friend for life. I can easily make him top trader on the planet. Right out of the gate, as you can hear on our podcast system, Dominic started trading when he was bored during COVID. But his father, Andy, trading alpha Fibonacci system on completely different instruments, managing multi-million-dollar accounts. So this is what Andy trades. Predictive proprietary system. All you need is Fibonacci retracement tool. And when you insert the levels, you knew many, many months in advance where Amazon would crash and burn from. Has anyone expected collapse on Amazon from 240 until 160? Has anyone expected sell-off on Amazon right now? When you recognize the power of this, and you recognize, my goodness, that was a brilliant idea to exit Amazon, but to buy Amazon in the month of April, correct? My goodness, this is Amazon in the month of April at 175. A month in advance, you know, Amazon heading to 200. And by the time Amazon reaches this level, you are in spectacular profit. As price moves one step at a time, you can day in position trade proprietary system, and you make a personal decision if you want to day trade or use hourly, daily, weekly, monthly charts. 220 is a critical target on Amazon, reached by early June. Correct? So my goodness, look where Amazon is right now. It's coming to selling pressure. The selling pressure on Amazon is here. Numbers of students have shorted Amazon from 240 level. So here we are on Amazon on September 1st. Pure and simple. Bearish correction on Amazon is on. 200 level to the downside is lifeline on Amazon. This is what Dominic's father trades. Dominic trades very different instrument, as you will see next. Because when you trade one, you can trade them all. You have absolute freedom if you want to trade 5 minutes on Amazon, or if you want to trade Dow, S&P, Nasdaq futures, or if you want to trade hourly, daily, weekly. Pure price is the answer. Proprietary alpha Fibonacci retracements for exits. Michael is my dearest friend for life. He brought his daughter to me at the age of 12 to trade, as you will see next. 99% of thousands of traders I worked since 2011 struggling. They calling in so much pain, and it's not traders' fault, because when charts are loaded and blocked with delayed indicators, it's really not a good idea. Your brain becomes clogged up, confused, speculative, gambling switch is on. It's not a good idea. I promise you that. But as you see in testimonials throughout the website, when you recognize that it's not traders' fault when brain is so sabotaged, because this is how marketplace is designed. When you start trading pure, the sky's the limit. This photo by Michael and his daughter, 15 years old. Emma came to me when she was 12 because Michael was so impressed with my work. Michael and I worked yesterday together. Michael now is a prop firm trader, trading multi-million-dollar accounts on prop firms. Emma right now is 17. In the next 2 months, we will take an updated photo. So when you're listening to Traders Podcast and you see, wow, children of my students trading proprietary system, it's pure and simple. You start recognizing you can trade any instrument, any time frame, any platform. Choice is yours. But when you will decide to day trade futures, multi-market scanner appears like this. You insert the chart you would like to trade, you insert the instrument, and the signal come up with a trade alert. You see clearly multi-trade alerts constitute institutional power. Single alert constitutes weakness. So if you decide to trade gold, of course you can. As you could see, my students trade in so many different instruments. Again, this is a scanner and this software to day trade futures. Traders trade gold, trade euro future, traders trade oil, traders trade Dow, bonds. Of course you can. Specifically, range and minute charts are very, very powerful with the Alpha Fibonacci trading software. This is what Dominic loves to trade. They trade Dow futures, but as you could see, S&P looks exactly the same. If you are at critical key institutional sell point that correlates with retail sell point, it's purely simple. Short the top when rules are met and buy the bottom when rules are met. When institutions buying and congruency is present and you are in the bold red zone, you have opportunity to buy the bottom with institutional traders. But if you decide to trade S&P or gold or oil, of course you can. Only difference, risk management and trade whole time. And that's how Alpha Fibonacci trading system removes complexities, noise, and allow trader to trade with predictive, precise simplicity on all instruments, all time frames, all platforms. System consists only of pure price for entry and proprietary Alpha Fibonacci retracements for exit. Terry just joined the course a few months ago. Terry called me in pain. He was shattered. He was shocked how tired he was from losing so much money in financial markets. Now Terry, my dearest friend for life. Terry is a prop firm trader. So when you listen to Terry's podcast, on my podcast channel again, Terry's podcast at the top, and then Michael, the photo of whom I posted to you prior. But when you look on the students' performance, you will see students' emails I receive. And when you will see the email from Terry, you recognize, wow, this is a trader who struggled just like Michael, but not anymore. As Andy shares, the accounts are prop firm trading at a pace I never thought possible. Again, many sense for such phenomenal trading system and for personal investment you place in each student daily. So when Terry comes to the course, his friends follow, his family follows. This is my mega trading superpower. I do not advertise on Instagram. I cannot deal with noise. The quality traders come from my students being my marketing superpower. As Alpha Fibonacci trading system removes pain, stress, confusion, chasing the markets, losing money, you activate intelligent traders switch in your mega superpower that most traders underestimate after years and years and years of struggling. So what is so powerful about this chart? It's pure and simple. It shows you, despite catastrophic global events, you as a day trader can buy bottom on S&P at 4,000 level. You as an options trader can buy leads, can invest on multiple other derivatives, seeing clearly how powerful the start of the bullish rally is. You as a day trader buying at the bottom with institutional traders, capturing the most powerful rallies, not shorting against institutional traders at the very start of the bullish trend inception. This was breathtaking and spectacular until price came to reversal zone where S&P sold off from. Do you remember the crash in 2025? Do you remember what played out in the months of January? Do you? Just to remind you, This was absolutely spectacular event and breathtaking, and have shown you clearly. The events that played out on S&P, give me a second, let me find the chart. I was teaching a class and I left the charts on. Too many charts is my only problem. One moment. Here we go. This is S&P this year. This was the crash of 2025, correct? So let me show you what played out. As again, the bullish rally from 4,000 level, you knew well before election would crash from this level. And I show you in a single class how powerful this is. So please pay attention, one step at a time. I'm taking you back until 2024, exactly a year ago, well before the election. So you can see the power of the system. Predictive simplicity in a play exactly a year ago, September 2024. September 25, 2024. Exactly to a day, correct? Bullish rally continues on. Critical key target is reached. But as you learn in the course, as I was teaching an institutional class yesterday morning to my very exclusive students, this was a beautiful place to short from. Well before the election, you knew many months in advance, January 2025 is not the place to buy the market, but to short with institutional traders. Here comes a crash. Oops, tariff war is on, correct? As a day trader, you're shorting the top, knowing quite well 5,800 on S&P is crucial. You also know many months in advance that 5,200 is a critical level to monitor for the market reversals at 5,000 level. The opportunity presented in the months of April were spectacular. Despite tariff war, you knew not to short into alpha Fibonacci institution. Buy point. Buyers are here at 5,000 level. This is why top financial institutions like Goldman appreciate my work. But you as a day trader buying the bottom at 5,000 level, and you as an investor understand opportunities like this that played out in the months of April will happen only every 3 to 5 years. This morning, September 2025, exactly a year later, we are no longer at institutional buy point. We are in massive institutional bearish correction. This is a critical key level to the downside. Bullish rally overextended. The biggest selling pressure we saw was here on that week, correct? And again, all of this spelled out at Fibonacci Trading Institute with proprietary Alpha Fibonacci system since the month of April. Intelligent trader monitors this level to the downside. But the most important institutional level is this. That's it. That's the reason for selling pressure that intelligent trader understands. This was a place to short from. If you're trading micro chart, 5 or 10 minutes, I'm bringing you back to a day before FOMC. So when you witness the power of the system and you knew extremely well, this was starting place to buy from. As a retail trader, as a day trader, as an options trader, love working with option traders. Love working with successful traders who understand the power of this. Zero noise, zero panic. No matter if you're trading 5 minutes, or you're trading leaps, or you're trading calls, or you're trading tick charts, you are very well prepared. You are right in the bottom, with institutional traders. Let's convert this chart to 5. Flawless. You can find what played out during FOMC on my YouTube channel. Here we are. This is the start of the bullish rally, 66.20. Correct? Converting this chart to 15 to a day later. Can you buy the bottom with institutional traders? Do you know where the problem will be? When I worked in Johns Hopkins research and psychiatry, I witnessed the power of colors on human brain. You can never, ever ignore this level. This is proprietary end of the minor trend. And you know extremely well. This level is out, this level to follow, this level is next. Just like Amazon, just like gold, just like every single instrument on the planet, Alpha Fibonacci system identifies this. Hours, days, weeks, months, and years in advance, all depends on the chart you trade. This week we come to the markets. We are bored out of our minds. Why? Because market is dead and frozen for more than 24 hours as it reached Alpha Fibonacci reversal zone. An intelligent trader knows 6740 is out, S&P in free fall, selling off. Oops, of course, not the place to buy, but the place to sell from. Agree? So no matter what instrument you trade, no matter what time frame, when you start using your limitless brain, as you will see next, complete beginner trader doesn't, anyone can. Sell off on S&P, reached the bottom on Friday. Sell-off was spectacular, correct? But what played out on Friday was a stunning reminder. With the power of the Alpha Fibonacci system, you knew where to buy from, and you knew what the problem will be. After all, this is proprietary Alpha Fibonacci buying point. On any chart, on S&P, on any chart on NASDAQ, this never, ever gets old. But don't buy into this level. Pretty please. If you do, you love driving your car into the brick wall. Buy the pullbacks here when rules are met. But this is drastically better. No matter if you trade 3, 5, 10, 15, any chart choice is yours. That's the power of the system. And that's the reason traders become my dearest friends for life. Identical event that played out live on S&P on Thursday at the close is what played out on institutional chart in the month of April. So I constantly remind my students, not everyone meant to be a day trader, but anyone can trade my system long term. On stocks, on Forex, on crypto. As Alpha Fibonacci system constantly reminds you, you want to trade oil, you want to trade Forex, you want to trade stocks, you want to trade gold, you can trade anything you choose. Pablo, my dearest friend for life, when he called me, he was so stressed out as an attorney. He said, my goodness, I hate my job. I want to become a trader. He didn't know how to push a button on trading platform. Pablo and I speak all the time. Right now, he's a prop firm trader. And he loves stopping by at Fibonacci Trading Institute to show you and remind you. With the power of your limitless brain and focus on simplicity, you can trade futures, you can trade currencies, you can trade stocks, you can trade options. Of course, you can. Just like Michael, who became prop firm trader, Pablo became prop firm trader. And you can hear it on our podcast channel. And you can see so many emails. But please remember, when you come to the website, and you see students' emails and you listen to students' podcasts, it's less than 1% of emails I received over the years. So when you see that complete beginner traders can trade markets as intelligent strategic chess, you can trade NVIDIA, of course you can. Let's go back to NVIDIA many months later, shall we? Because you witness time and time again, when alpha Fibonacci target is reached, you absolutely must monitor for selling pressure. This is NVIDIA exactly a year ago in September 2024. Here we are. Not the place to buy, it's the place to short NVIDIA. NVIDIA in free fall and the world is shocked. My goodness, how is it possible? In the AI world, NVIDIA is selling off. NVIDIA reached alpha Fibonacci target by the month of January. Bullish rally in free fall. Price moves one step at a time. 135 is out, NVIDIA heading to 111. And by the time month of April comes, you are ready to buy the bottom on NVIDIA. If beginner trader can do this, if 12-year-old son and daughter of my trader can do this, anyone can. You are not forced to day trade. You can trade 15 minutes. You can trade hourly. You can trade daily. So many of my students work full time. Look at the chart once a day, once a week, once a month. Phenomenal breathtaking rally on NVIDIA from 90, doubled in value since the month of April. Right now, NVIDIA in massive bearish correction. What to do with your position, I discuss with students in group and private mentoring sessions. As NVIDIA bullish rally reached alpha Fibonacci reversal zone. That's it, pure and simple. Again, reflect on that. This is NVIDIA, this is S&P. Identical strategy applied. Choice is yours. As you will see next, if you want to trade tick chart, range chart, minute chart, or if you want to use system long term. Every single strategy I ever developed, just to give you a glimpse of my work, right click strategies. This is this year alone. This is my passion, this is my obsession. 21 years of building my own system. Every single one of my systems developed on pure price for entry and proprietary alpha Fibonacci for exits. You make a personal choice on the instrument and time frame you want to trade. So when you trade with institutions and you activate your intelligent strategic brain switch, the skies are the limit. I love working with chess players. Chess players mastering system incredibly fast because their brain already is strategic. Just like Wall Street loves hiring chess players, I love working with chess players. So if you understand the power of this, pay attention, please. This is Apple before April. This is Apple exactly a year ago in the month of September. So if you understand the power of this and how predictive and simple system is, and I show you time and time again how you can backtest the system going back many years, oops, Apple comes to decision point 1. Very important moment on Apple in the month of January. Oh no, Apple in free fall. So how is it possible that tariff war continue playing out, but you know exactly where to buy Apple from? many months in advance. Doesn't matter if you day or position trade. April was a dream. Here we go, tariff war is on, but Apple skyrocketing. Correct? And you are incredibly well prepared. Again, reflect on this moment versus what played out on S&P. Correct? 90+% of stock market, phenomenal rallies. Correct? But again, this is a retail chart. This is 3 minutes, this is 5 minutes. Any chart choice is yours. But again and again and again, if you cannot pass psychological and technical tests, do not beat yourself up, I beg of you. Life can be extremely stressful. You cannot day trade when you are stressed out. You cannot day trade when you are financially desperate. Your brain already raging with cortisol. But you can use system on much larger time frames. In order to become a successful day trader, you must be emotionally and financially stable. So simply spend time preparing for your trade. So now Apple came to serious selling pressure, correct? Again. Phenomenal, spectacular earnings and news do not mean a thing when alpha Fibonacci level is reached. Rules are met. Bullish rally taking a massive pause. You also know many months in advance where Apple heading to next. How to trade this, you learn in the course. Pure and simple. So when you have that flexibility and that power to trade any instrument, any time frame, every platform, you never spending hours, days, and weeks staring at the screen, hoping that trade will play out. You know exactly where to trade. You know exactly key institutional levels. And when you know where the top to sell and where the bottom to buy and where the middle stock in horrific chart, you do not trade the junky markets. Example on events and trades on euro are breathtaking. Why? Because it shows you, despite catastrophic events in Europe, you need to buy euro at the bottom. My hometown is bombed. My friends in shock. It shows you how horrific this was, how no one expected this to play out. A friend of mine in Kiev got married on the day of the war. They saw they had too much to drink. No one believed that this would play out. Here's October 2022, 6 months after catastrophic events. Because when I lived in Ukraine, no one cared if you're Russian and Ukrainian. We all were mugs. You can't even separate the DNA. It just simply says Eastern European. No one ever cared. That's why it's still difficult to absorb that fact. But here comes the bottom of the alpha Fibonacci system. In the months of October 2022, euro skyrocketing. Is it possible? Catastrophe in Europe, but euro is rallying and moves one step at a time. And you know many months and years in advance where euro heading to. So the day trader, you're riding the bottom. As position trader, you're riding spectacular bullish rally. Here comes another catastrophic event in Europe, October 7th. 2023. Shock or not, look where euro is. You are not shorting euro. You are buying euro because rules are met. Sell off after euro reached reversal zone, showing you absolutely no shorts despite additional catastrophic war in Europe. As of this morning, Euro skyrocketed and doubled this value. But now euro selling off because it reached alpha Fibonacci reversal zone. This is a chart present in the trading and alpha Fibonacci course for years. That's it. Here we are. Pure and simple. So this is massive bearish correction on euro. War in Europe worse than ever. Euro kept skyrocketing from critical key alpha Fibonacci by point. Again, identical event on S&P on Thursday, on every single day trading chart. So if you want to trade S&P or NASDAQ or oil or gold, of course you can. Pure price for entry and alpha Fibonacci for exits. As you see, all of these charts, traders all over the world trade. US dollar is one of my favorite events. Why? Because I spelled out years in advance where US dollar would crash and burn from. And I spelled out where US dollar heading to now. So if I bring to your attention US dollar well before the election, you understand the power of this if you're an intelligent trader. So when I work with JP Morgan traders, whom I coach for many, many years, this is what they trade. This is how they trade. Options on stocks and long-term forex. Of course you can. But as a day trader, this is what you want to trade. Take a look on this chart more than a year ago, July 2024. My goodness. Do you remember the power of the bold pink line? Do you remember how critical this event was? Wow. Finally, this level is out. But you knew, independent of election, no matter who would win the election, this is where US dollar would crash and burn from. Here's the low on US dollar. January 2025, shock or not, US dollar reached reversal zone. Intelligent trader understands when rules are met, take short. Correct? Here comes tariff war. US dollar collapsed. Worst time to travel to Europe. Agree? So when you see the power of the system going back years, and when you understand the power of shorting the top and buying the bottom, no matter what chart, no matter what instrument, no matter what time frame you trade, right now, us Americans can finally exhale. US dollar heading higher, reaching critical key target right now in front of you, which is extremely important event. That's it. So whatever you decide to trade is your personal choice, as every single trader on the planet for the last 15 years trading anything they choose. Still struggled for so many years. As you can listen to her podcast, she lost over $80,000. When she came to me, she said, "This is the last course I will ever take." Right now, Sue is my dearest friend for life in Dallas. She could not even trust her financial advisor. And right now she says, this is all she trades. And she's not just managing 401ks and helping her loved ones, but she is trading S&P, she's trading gold, she's trading Bitcoin, oil, and silver. All on my website, all on the podcast. So stories like Pablo, like Sue, like Dominic, like Andy, like Michael, like Terry is the reason I live and breathe what I do. Patrick, been with me for 15 years. He's in his 80s. He's obsessed with my work. And so is what is so important to say and see, as Patrick says. The boot camp he took changed his life forever, changed his trading forever. And of course, my students making me blush when they're using word genius. So I live and breathe what I do. And this is the reason I bring Fibonacci Trading Bootcamp to you, where traders like Pablo, where traders like Michael, Terry, and next you will see Theo coming to the class since the middle of the night just to share their stories. So if you would like to see how traders all over the world trading Bitcoin with Fibonacci Trading Institute, are you surprised why Bitcoin is crashing and selling off? But in the month of April, Bitcoin is giving you phenomenal opportunity to buy. So if you're trading 5 minutes of Bitcoin, or hourly or daily or weekly or monthly, you are very well prepared to buy Bitcoin at a very famous bold pink line. Correct? This is Bitcoin in April. We agree on that? Yes? This is S&P on Friday. And so was NASDAQ. Bitcoin skyrocketed from this level until reversal zone. So when I work with Elmer, cancer surgeon in private mentoring, who just signed up for my advanced elite strategy, we're focusing on crypto, we're focusing on Forex, we're focusing on futures, on any instrument you choose to trade. So Bitcoin in free fall, this would be phenomenal opportunity to buy again when rules are met. This is key level on Bitcoin. This is lifeline on Bitcoin next. That's it. But again, you knew many months in advance where to short Bitcoin from. So here's my final and favorite example. Why do I love this chart on Tesla? I love it so much because you knew many months in advance, well before Elon Musk joined Trump's force, where Tesla would crash and burn from. Here we go. Let's go back on Tesla more than a year ago. You understand the power of this. You're blown away. You know where to exit your Tesla. You know where to buy Tesla from. The bullish rally in Tesla continues until it's not. January 2025, Tesla in free fall. And you knew this well before the election, and you knew this well before tariff war. You're not buying Tesla at reversal zone, you're shorting Tesla. Identical event as on Bitcoin. Identical event as on US dollar. Here comes month of April. Catastrophic tariff war, an embarrassing, humiliating events between Musk and Trump. Surreal to read what's on the news. My students buying Tesla despite these events. Oh, as Bryce reminding you clearly, no matter how horrific Tesla earnings are, non-stop, no matter how humiliating and horrific exchanges between Elon Musk and Trump, Tesla doubled in value. Oops. Have you expected that? Did you know that this will happen when you trade Alpha Fibonacci system? You can then position trade Tesla. You can use it with leaps. You can use it with calls. You can use it as an investor. You can use it as a day trader. Choice, absolutely yours. And that's the reason students becoming my dearest friends for life. One more example, as I believe I'm running out of time. Amazon. Has anyone ever expected 40% crash on Amazon? Oops. So when Sue's taking short on Amazon, a few weeks ago, she knew what to do because Amazon came to Alpha Fibonacci reversal zone. Here's Amazon before bullish rally on April 1st. Tariff war zone, intelligent trader knows where to buy Amazon from and where Amazon heading to next. So here we are 6 months later, Amazon in free fall. Again and again and again. My goodness, how is it possible Earnings are fantastic and great, but Amazon's selling off. If trading on the news worked, you would have been shorting, not buying Tesla. If trading on the news worked, you would be shorting, not buying Euro. If trading on the news worked, you would have been buying NVIDIA when NVIDIA was in free fall, correct? So when you start using your limitless brain and you understand the sky's is the limit, when you trade alpha Fibonacci system, simply use your limitless brain, because when traders all over the world can, from 12 to 80-plus-year-olds, anyone can. I absolutely love working with Theo. He's a legend in Melbourne, but he loves coming to classes in the middle of the night to share his journey and story. So this is the reason I live and breathe what I do. This is the reason I keep saying no to top financial institutions in the world. Because if I worked for a cubicle in New York for a company, they would own all the systems I ever developed, and I would never have thousands of students as my dearest friends for life all over the world. I would have never been invited to a wedding in India. I would be meeting my students in Switzerland and Monte Carlo, next Sydney, California, New York. I know my purpose. Fibonacci is my passion. Humanity and empowering traders is my obsession. And the reason I wake up 4 o'clock in the morning during weekdays, and I'm here with you today. So if you're serious about trading, I look forward to working with you. We have only 6 spaces left in Fibonacci Trading Bootcamp, but as you're witnessing students, my marketing superpower creating movie about Fibonacci Trading Institute, celebrating 14 years, but 15-year anniversary coming up. This is a global community of traders all over the world who are trading the system. Ken is a movie maker who is trading crypto on his phone. And when you listen to them and you listen to their journeys and their stories, you understand. This is very exclusive club to very few. No Instagram, no noise, no nonsense, no Discord needed, ever. I only need quality traders in my Fibonacci Trading Bootcamp. Absolutely no cost to new students. Value 27.
Oh, I'm sorry. Can you hear me?
Include in group and private mentoring courses. So when you choose one of these options, Fibonacci Trading Bootcamp included savings up to $10,000. Every single option includes recorded bootcamp, hundreds of videos of prior live recorded classes. And when I work with you one-on-one, I hold your hand, I test you, I quiz you, I keep you accountable, and we're focusing on the instrument of your choice. Group course, the most popular option, savings with a bootcamp, almost $8,000. Lifetime system, all platforms, with a lifetime software to day trade futures for Ninja Trader 8. If you have any questions for me, please do not hesitate to contact me. Simply call or email me. And when you come to our homepage, simply click on our trading room invitation, the pop-up, and you can come to the trading room and ask me any questions. But please, please, please do not hesitate to contact me. Thank you so much, everyone. It's been my joy and honor. Thank you, Traders Corner. Thank you, Anthony. Thank you, Mary. Thank you so much. Have a joy-filled weekend. God bless. Thank you, traders.
Hey, thank you all. We really appreciate it. And thank you for those powerful tools and insights. Traders, we've dropped her link in the chat box so you can dive deeper into the Alpha Fibonacci Bootcamp. Moving ahead, our next presenter is Stephen Tremper, creator of the Discipline Manager. If you've ever struggled with emotional trading or inconsistent money management, Stephen's tool was built to solve exactly that. He'll show you how to pre-establish goals, monitor your trading behavior, and regain control during discipline breakdowns. So please welcome Stephen.
Hi, Anthony. Can you hear me? Am I showing my screen?
Yes, we can hear you, and
Can you see my screen with my mouse moving around?
yeah, we could see that.
Okay, good. I just didn't. With so many screens, it gets a little confusing. But well, thanks again. Thanks for the opportunity to introduce myself and the discipline manager. I hope my intent is that I'll help other traders overcome the same struggles that I have. I'd love to say I had, but I still have, especially in weeks like this. So without further ado, what I like to do with the summary is explain, what is and do you even need a discipline manager while trading, and show you how to establish your rules within the settings inside of discipline manager, and give or show you some examples of what'll happen when your limits are breached, and how to download the discipline manager, and just have a special offer for today. And then depending on time, a couple Q&As, question and answers. If you have any questions, you can just throw them in as I talk about the topic, and we'll try to come back to it. I'll have to look at, I typically don't look at the questions now, so just go ahead and throw them in there if there are any. So first of all, who am I? My name is Stephen Tremper. Steve typically is what I go by, and I was in the fire service for a total of 40 years, starting as a cadet. I retired in 2019. I started learning, playing around with the markets, years ago, and I failed out of options and failed out of Forex and all that stuff, just impatience and whatnot. But anyway, somehow I got introduced to futures, and kind of found that to be my home. I like it. It's a little easier for me and my style. Everybody has their own style, and I still, the big thing that I still struggle with, and I always have struggled with, was the psychological side of the emotions when you're actually in the trade. And when you're finally in the trade and it's going up and you see your money being made, and if you tighten up your stops, and you end up getting popped out just for it to go where you wanted it to go, and all that emotional business. So I still have issues, but that's actually how the discipline manager came to be. I'm like, there's got to be a way to kind of police me, if you will. And I know in the big firms that they have, people, managers that tap you on the shoulder and saying, hey, you're having a bad day, why don't you go take off the rest of the day, or whatever they do there. That's the market and the pit. That's me when I took a tour there with one of the prop firms. I never worked there, but I wish I had, but I enjoyed my fire service life too. So I guess it's my second life. Anyway, governmental required disclaimers. I know they talked about at the beginning. I'll just plot them up here for a second. Obviously, trading is risky, and you can pause that and read that. I don't need to go through it. The discipline manager actually stops you from trading. So in any event, you really don't need to see that, but I'll show it here anyway. So 90% of traders fail. And I looked at these statistics. You can look them up yourself, and it's like, why is that? And a lot of the thing has to do, most of the things have to do with the psychology part of it. If anybody's gone through, what's his name? Comes Mark Douglas. He's got some books out there and some great things that helped out. There's other things out there, but moral of the story, it's all about money, because people are, they have the hope and the greed, the fear. What's the old saying? Pigs make money, hogs get slaughtered. So that kind of business. And mine is waiting, or lacking of discipline, and that's where I kind of have struggled with my issues. These statistics are not mine, based on experience. I'm just a trader like anybody else. Ever since I started Discipline Manager, Ninja brought me on as a vendor, but I'm just a trader. I have a company which is an LLC, Tremper.com, but it's just me and maybe a little bit of my daughter. But you could just pull up these stats yourself right on Google. There's nothing that I'm just making up my own here, but the moral of the story is, why did they fail? And it's the future the failure to limit the losses. My problem was over trading, especially when I first started getting into it. I always felt like I had to be in the market. So I was just, if it can't go up, it's got to go down. So you go down. If it can't go down, you go up. And it was crazy, the amount of numbers that the brokers loved me. I think I probably their best customer. But fear of missing out, that's the thing too, is that if you don't get in, oh my gosh, it's going to go without me, and I know it. And so you get in, and of course it goes down, and then you get popped out, or you just have to take a lot of heat, and then it goes ultimately in your direction after it pops you out, or you just say uncle and can't do it again. So it's all about waiting. We're not traders, we're waiters, and it's just so aggravating, the fact that you have to sit there and wait for it. And that's my struggle, and that's one of my things I got to deal with, and that's where the discipline manager kind of comes to be, because if I overdo it, I know that it's going to smack me out, and of course I don't want that. And it's also good, the fact that once I do hit certain levels, my rules are in place to let me go a little bit, but be on the cautious side. So my worst 4-letter word is wait. I haven't stressed it enough. You have to master the ability to wait, and you need your self-control on your trades, and that's what we get paid to do. If you wait and you finally get what you wanted to get, then you get paid for it. And so that's the name of the game. That's my struggle. And if anybody has any suggestions for me, I'm more than welcome to take those. And that's me sitting in front of a computer, especially that's why I like NASDAQ, because as I mentioned, I was in the fire service, so maybe I'm a little bit of a adrenaline junkie. And NASDAQ is it's like ADD on steroids. And so I like that action. And when it's slow, you have to wait for it to get into the right spot. And that just drives me nuts. So anyway, this a lot of psychology and the discipline. The psychology and discipline are the rules. You have to deal with the losses, getting out too quickly, holding positions too long, skipping trades due to fear of loss, over trading. The discipline, actually somebody told me this, and I wrote it down because I liked it. The discipline manager cannot help you with your psychology, but it will help you with your discipline. And that then leads to a healthier psychology. And that's really true. And that's why I kind of like that phrase there. It was good. You've got to learn how to control your losses. Whatever your average winning day is, you don't want to lose more than that on a bad day. You've heard the old adage, surrender to the fight, but not the battle. Everybody has a different account size, so using 1% loss limit on a 5% account is not the same as $5,000 account when you're trading micro. So you have to kind of look at what you're dealing with and how much you can handle, and then go from there. And especially with these prop firms and trailing stops and all that, you really have to watch that a lot. Number one rule for Warren Buffett says never lose money. Rule number 2, don't ever forget rule number 1, and that's so true. And of the 4 choices, you've got the big win, you've got the small win, you've got the small losses, and you got the big losses. And eliminating these big losses will help and result in your psychology being much more at ease. Get rid of the big ones. The little small ones are fine. We can overcome those. No big deal. The broker likes those, but that's all right. So to stop losses and ATMs, nobody knows as far as I'm concerned, nobody really knows the risk reward. I've seen it blow through areas that you think it would stop, and it just blows right through them. It all depends on how many people are in the market, and if somebody steps in and say, buy a lot. So, but really nobody knows what they are. You're already, know what your risk is, because it's based on your account size and how much you can risk on a trade, depending on where you get in, based on your parameters. But what's the reward? If you're taking profits, is it really going to stop right there? I've seen it blow through those many times, and so it's kind of a hard, but it's a question that it's all about probabilities and what's good for you. Everybody has different. If you're swing trading versus day trading, do day trading, so don't have time, especially if it gets later on, you're running out of time, so you get the time working against you. And the risk side of the trade is the only thing that you really can't imagine. As I mentioned, don't move your stops. You can adjust them obviously here and there, but just keep moving them back and back and back and back is not a good rule to live by. Don't get caught up on the revenge trading either. I've been there too. So that's how this all started, because I've been there. All the indicators that I've made for myself. So, and you never want to give up though. I mean, I can't tell you how many times I've just gotten so frustrated and say, I just can't do this. This is nuts. But then I get back and I'm like, yeah, I mean, it is. You can. You got the chart. I look at my chart and I'm like, well, this is fun getting into it. And then, oh, this is kind of hard. And well, I have no idea what I'm doing. I just, get it. I just don't get it, whatever. And then you're like, well, you just kind of get in it, you do it again. And then finally you win some trades and the market has a way of saying, hey, come on in. You get in there and it smacks you back down again. And it's this emotional roller coaster. So eventually, if you finally master it and you finally have a nice P&L where you feel comfortable with it, whatever that's different for everybody else. But once you start feeling that you're starting to get some of these trades and passing on ones you don't like, you start to get it. You feel that's where the psychology then kind of comes in, and you feel it more at ease, and that's what it is. But getting there is half the battle. So you need to protect yourself from you with your personal, trading manager. So you got to think of it as you're the CEO of your business, and you are. I mean, people always talk about your trading business, it is a business. You are your boss, and so you are the CEO. You need to delegate the rules to the discipline manager. So whatever you as the CEO determines how much you're willing to give up or how much you want to do, how much you want to trade, etc., you allow it to monitor your trading employees. Well, your trading employees happens to be you too, just have a different hat on. So on the weekend or at night, whatever the case is, you put these rules together, and now the manager and the employee then goes out and trades during the course of the day. And if your trading employee gets out of line, meaning you get out of line during the course of the day, the manager is going to tap you on the shoulder and say, hey, let's stop for the day and, count our blessings. And then at the next CEO meeting with yourself, then you can reevaluate. Maybe your settings are a little too tight or too, whatever you can do, you can tweak them. But you do it after, the market and on the weekend when you could, have some time to think about it. You never really want to kind of play around with it then you start getting into the revenge trade. So that's why you deal with it at a later date. You make your notes, what you need to do, and then you do it after the market, setting your money management rules. The discipline manager is allowed to, allow you to set your own hard daily stops and weekly stops along with your goals. How much money are you willing to take, and then how much are you willing to give back if you do get that. And if your hard drawdown limits are hit, then you're done for the day or the week. Mainly it's the day, but there's settings there for the week if it accumulates. But moral of the story, it's the day. Just be done for the day. And once your daily goals are hit, then you can continue to trade, but you never want to give back more than, you don't want to give it all back. So you don't want to give back more than whatever your amount may be. Some people I do know that don't have any. When they hit their goal, it won't let them trade again. It's just zero, nothing, I'm done. And so you could set that appropriately. I've seen, 50% back, 95%, basically playing with house money, that kind of thing. So there's all kinds of things out there. Warning boxes are displayed when the thresholds are breached, if you have your warnings on there. And as far as the reset, there was much discussion regarding creating a reset button. So you're in the middle of the day and you're having a bad day and it pops you out and says you're done for the day. Well, you just hit a reset button and says, okay, thanks a lot, but get out of my way. Well, that's kind of defeats the purpose. But at the end of our meeting, we realized that, you are still the owner of your business, the CEO, and you can fire the manager anytime you want. You can fire the employees, whatever you want to do, you are the boss. So we really we don't want to stop you from managing your own business. On the other hand, we don't have to make it that easy too. So that said, if you opt to reset it, the discipline manager, the window, Windows, you'll navigate you to it, and you can, it'll ask you the question to press the reset button, and then you got to shut down, and there's a little bit more to it, but you shut down, and you got to go back and reestablish accounts. And so it can be done, but doing it in the heat of the day, by the time you get ready and back online, your emotions are probably over anyway. So in essence, it's kind of taking care of itself. So here's some of the settings that you have. I just took a picture of it, it's a little easier. So this right here, this little arrow caret down here that allows you to do a drop down, so you can pick the account of choice. So people that are doing the trade copiers, you'd have to set your rules for each one, or at minimum, the leader account would be go right there. So, but they might be different though. You might have one account, or maybe your leader account if you're trading a copier or not, whatever. But your leader account may be in minis, but then your other accounts might be converted to micros. And so obviously they have to have different numbers for those different sizes. But let's say your warning comes in at 350 bucks, and I just made these numbers up. So let's say you lose 350 bucks, it's going to give you a 15-minute timeout. The warning comes in and says, hey, look, you breached your $350, and so therefore you have it's like a circuit breaker in the market. And so you take 15 minutes, go walk around the block, go grab some cup of coffee, some water, whatever the case may be, and you can come back and continue to trade. Now, if you go down to $500 in these particular settings, you're done for the day. That's it. And your daily goal then is just that too. So let's say $500 is your goal. And then what happens after you've done that? What do you want to do after that? And so it's called the dynamic drawdown, because the drawdown chucks away the higher you go. So let's say you want to have a warning at 30%. So if you give up 30% of the 500, once these rules kick in, then you're going to be able to give back 30% of it. And if you give back 50% of that, so if you breach 250 bucks, then you're done for the day and you'll get the halt. And the same scenario goes with the weeklies, same theory. Now you could include, this was added in a later version as far as unrealized orders or realized. I think the default is realized, but you can do that based on your desire and your prop firm or your broker, whatever the case may be. You could do it that way. You have to make sure it's big enough to manage that. And then if you're trading multiple contracts, what happens if you get out on your first contract and you've breached your goal? What do you want to do with that remaining contract that's still open? And by default, it's going to be close it. So you're done. You know that first contract. Now, it could be that second contract actually wins and it gets you above your breaking threshold, and then you will just continue on like you never did. But on the other hand, if you let it go, then and it goes against you, then you could even be out more than what you originally intended to do. The stats show, the P&Ls of where you're at, and your peaks and your weekly peaks and all that business. And then there's that reset button we talked about. So if you hit reset on that, then you've got to, you got to close down and other things like that. So this is not an indicator. This does not get placed in a chart or anything like that. You can have it open. I mean, there's no problem having it open if you want to see, stats or something like that, but it runs in the background in a separate window, and it doesn't need to be open. And so when you close Ninja and come right back into it again, it'll just be there in the background. It'll just be running, assuming you actually applied your settings. Obviously, if you didn't apply your settings, before you apply your settings, it's going to say apply, and once you apply your settings, it's going to say reset. So it goes back and forth. So let's assume as I mentioned, you have a $500, or what in this case, you've got a 350 drawdown warning, and then you've got a halt of 500. And again, once you breach that, your circuit breaker will kick in and give you a 15-minute mindset. And there's a warning. We can't get rid of the error. It's really a warning box, but it comes up as an error, but it's not an error. But anyway, it just shows you that the warning's been hit on such and such a time and date. It'll mark it, and it gives you a 15-minute timeout to go, chill out. A mindset, if you will. After your 15-minute timeout, you come back and you're allowed to continue to trade until you hit that drawdown halt. And then you're breached. And if you breach that, then you're done. And at that point, you're not going to be allowed to trade. Now, you can try trading it again, but it'll just instantly, within a millisecond, take it right back off again. And if you think you're faster than it is and you put on a market order just to get in right away, you'll get in, you'll get your commissions, and then a millisecond later, it'll take it right off and you'll get more commissions. So you do that once or twice, and then you realize, okay, that's not going to work. So, and there's the halt if you get hit too many times and it's like, okay, I'm done, I'm breached, that's it, no more. Now let's talk about the better side of things. Let's talk about the goal. So now that you've hit your goal, and you get the pop-up that says, congratulations, you've hit your daily goal. So your drawdown limits, what we applied for before, those are now in effect. And you can just close this off and put it away. And so now you hit your goal and you can continue, but you can only give back the percentage of what your earnings are, and that grows as your P&L goes up. That crawls along because we're dealing with percentages, not a set amount. So that's why we go with that. We don't want to say you hit your goal of $500, now you got $250. Well, no. What happens if you get your next trade and now you're up to 700? Well, you don't want to give back $250. You only want to give back 30%. So that's how that kind of works. And it's, now some people have, options, as I mentioned earlier. You could do 0 and say it'll instantly halt you and you're done once you hit your goal, and that's totally fine too. You've made your money, go away, go play golf. Or you could do, you can give 100% of your goal and just play with house money minus maybe some commissions and whatnot. But I've seen a whole slew of different percentages, and that's just something that you, as the CEO of your company, have to decide, what you want to do. And as discussed earlier, the dynamic drawdown rules also incorporate the circuit breaker timeout, and they stop for the 15 minutes. After your timeout, you can continue to trade. I think I've gone through that. The dynamic drawdowns are just that. We talked about it. So here's some examples. Say you realize $1,000, so your warning will pop in at 700, and then your halt will stop you at 50%, and then you're done. So after your 15-minute timeout, and then you go down to 500, then in this case you'd be done, and that would be the end of it. Now let's say you get up to the 1500, your next drawdown, because there's 2 levels, so you go ahead and you make that. Now you're all up at 1500, and you have another level. You could see how it just continually grows up with you. And there's the I use 999 if you don't want it. Some people actually have a little trick that somebody showed me, that they don't want the warning. And so if you just put 999 on there, you're never going to get your warning hit. It's like right here. So if I get to $1,500, just don't give me a warning. I don't want to have to deal with that. So, that's certainly your prerogative. And there's your 2 levels. You really want to change levels when you want to change your percentage. So if you're at 50%, or in this case, you're halting at 75%, well, it's only when you don't want to give back 75% do you want to change. If you made it all the way up to for you 2,000, now you're at 3,000, at 4,000. Do you really want to give back 75% of that kind of money? So that's where your level 2 will kick in, and you'll say, you drop that down to maybe only a smaller manageable portion of whatever that might be. And if you're dealing with micros, you just got to put the numbers appropriately and counted for that. You've got your weekly levels in here, and then existing positions, I think I talked about before. And what else? And then here's the bottom half of the settings table. They talk about your peaks and things like that. And then this right here, if you could click that, and it'll save a default. So once you get your numbers in there, you don't have to set all those numbers for each account. You can just save it as default, and then but you do have to apply them for each account. So if you are playing with multiple accounts, you do have to go to each account and then set it and apply it to that account so it's independent. If you don't do that, then you rely solely on the leader account, which is fine. If it does what it's supposed to do, and the leader account has the discipline manager on the leader account, and everything's working perfectly, then yes, that leader account will, the followers will follow it, and they'll be out also. So that's kind of up to you if you need to have it on each account or not. But so there's all the settings in a nutshell. You just come down here, and it's just one long list, and there you go. And then there's the apply, as I mentioned earlier, and the drawback. Now, one of our main obstacles in the discipline manager is you can't suppress market orders. We tried doing that, and there's an open ticket on that, but for right now, market orders can't be suppressed within the Ninja platform. So trying to get that done. So right now, if you think you're going to be able to just throw a market order on it, as I mentioned, you'll be able to do that, and it'll put a market order on, but it will take it right off again a millisecond later, and then you'll just be stuck with some commissions and possible slippage. So if you're running a bot, that is, some bots do market orders. And so if you're running a bot and you've breached your goal, and then your strategy comes along and says, hey, there's a setup, and it puts on an order without you turning your strategy off, then it'll take it out and it'll turn it off, and that'll be the end of that. So this is the order that we have, or the ticket number, I should say, we have. It's called suppressing manual orders. It's been in there for about 5 years, and there's no status on it. So unless everybody starts bombarding them and saying, what's the status on that, I don't really think too much is going to happen with it. So how do I get started? Currently, we have a subscription. We do all the subscriptions. I can't tell you how many thousands and thousands of dollars I've spent, and it's just so much easier with subscriptions. Is keep them at a low price, and then that way, if you're not happy, easy peasy, just go in there and turn it off. And a lot of people actually have come in and they've done it for a few months. They get a taste of it, it's fine, and they cancel it. Great. 6 months later, they come back. You don't need to have this for the rest of your life. I mean, it's not intended for that unless you're running bots. I do have a firm that's running bots, and they, you know, kind of have it for a police, if you will, as a backup, which is fine for middle of the night and whatnot. But in my kind of trading and where I'm reaching out is you really don't need to have it constantly unless you want to. So when the time comes where you feel that you've, you know, kind of got it under control, you just turn it off. No big deal. There is a free trial that is available. So once you downloaded it, you just it's the full version. You just go ahead and do it. And once that trial version is over, then it is going to require your third-party machine ID to go ahead and continue on that if you want to continue. You have monthly and annual options, and PayPal makes it very easy to manage your subscriptions by going into their platform and turning them on and turning them off. So the way to do that would be go to the webpage, tremper.com, and you can go to algos and indicators, and kind of move this around a little bit, but yeah, it's the discipline manager is right there. You can click on this one. These are all other ones that I've made. I've made all these for me. So if anybody wants them, I kind of put them on the page since I have it available, but they were designed for me. And this was not my first one. Actually, reversal bars was my first one for NinjaTrader 7, which is even listed here for 7. But this one was, I think, my second or third, and this is the one that kind of hit home to a lot of people. So apparently I'm not alone in this world when it comes to discipline. So anyway, you can click on that one. It takes you to the next page, and then you can read pretty much all about that. And right there is there's a download file, and this is an older page, so things might have changed a little bit. But anyway, there's a download file that gives you the trial, and you put it in with, you know, you go to Control Center and Tools and import Ninja script, and it'll say, do you want to? Do you trust the person? And then you do it, and then you have to reshut Ninja down and then relaunch it because it does, you know, go in the background as I mentioned. And then you can go turn on your rules and start setting them up, playing around with it. So what we have today is, on behalf of Traders Corner and the ability to reach out to you, we've put I say we because it's basically me, 30% off on a limited time only. And this is part of the webinar of the discipline that can be downloaded using the discount button on the Tremper.com discount code page. I have a page dedicated strictly for discount codes, which have changed quite often, and I put it, that's kind of makes sense to put it there. So I put it down at the bottom of that one, and it's got a 30% off button. So if you went to the button on the main page of Discipline Manager, then you'll be able to do the same thing. The only problem is, or difference is that button is going to have the regular rate with PayPal. It'll go right to PayPal at the regular rate, whereas this button that I'm going to show you where to go to in a super secret place, it'll give you a better button, which will give you a discount. Now the thing with the trial though, the discount code button is going to last 5 days, whereas the trial period is going to last longer than that. So the code button will instigate or start it right away. So if you wait until the full trial is over and then you go to the button will be gone. So you have to kind of decide what you want to do and then go for it. Now under referrals or discount codes, I have a link up there now that just specifically says discount codes. and you go there, and then when you get into there, it will down at the bottom. Now, these are the ones that are, these are, you can tell they're old, 2003 and whatever. So I change these all the time. You got to update your page, or I mean, just go in there. If you want to get on the list to get an email, I can send you emails. But needless to say is you can go in there and see who's current, because I change it regularly. But down here is a button there for the 30% off, and that's the one you want to kind of use. And then that button is going to take you to the PayPal, which you're probably familiar with, and then you go from there. There is a annual, and then there's the 30% off renewal. So that, I like to keep it, as I say, I like to keep it a little, I don't want to say cheap, but I mean, I just have a problem with the amounts of money that a lot of these are, and I just don't feel that, you know, when you're in the business, especially starting out and you got some issues, it's like, hey, you know, you just use this and tell 2 friends, and they'll tell 2 friends, and so on and so on. So once you do decide to continue on, we are going to need to go into the contact page, because in there, there's going to be the contact form, and in there, it's going to say your third-party ID. And there's a little 1-minute video if you want to know how to get that, but you would use your third-party ID, and then that I would need to then continue it forth and go from there. So how do you get a hold of us? Obviously Tremper.com if you haven't figured that one out, but you can go to the contact page. Skype, oh, I got to change that because Skype's no longer, so that's going to come out. But info@Tremper.com, or the phone number you can call. If people call anymore, I guess nobody talks to anybody, but if you do want to call, you can call and I'll talk to you. So other than that, that's all I've got. So that is how you can get a hold. Oh, this is a 2020, the COVID chart. So if anybody, Anthony, if you're there, I didn't look at the panel. I got to look at chats. If anybody's in there, I can never tell on go to webinar where those chats are. But I don't know if anybody has any questions or not. But I'll be more than well. I try to speed this up a little bit, only because I wanted to stay on track, and which I've done a pretty darn good job, if I must say. So other than that, that's all I have. Let me check. Anthony, are you there?
Yeah, I'm here. Thank you, Steve.
there,
Thanks for keeping
Steve?
us on track. We really appreciate it.
Yeah, I sped it up a little bit. Do you have anything in chat though, real quick, or no?
I don't see anything in chat.
Okay, I must have done a good job. All right, well, that's
Yeah.
all I got then. I wanted to keep this on time, and that's one thing good about being in the fire service. We get adjust for every situation.
Yeah, definitely. You know, I was thinking about that too. Like traders in general, like we are always like putting out fires in a sense, but like we have to act in emergency type situations though.
Well, there are, and I could tell you, there's been times I've been in a trade and the internet goes out. You talk about a pucker factor. You know, you're like, oh boy. It's like, I have the phone number to Ninja because I have my accounts with Ninja, so I have my phone number, or their phone number, their hotline right in there, so I could pick up my phone and, you know, and get to them instantly and say, just flatten my account or whatever once you find your account. So there's things like that I would recommend, you know, putting in your phone just to have it available. Then there's also one for, you know, if you got to talk to your prop firm, and some have them, I guess, and some don't, but there might be hot numbers for those, or apps now. There's another one, but there should always be a backup, because in this world, you've got your computer, you've got the internet, you've got the broker, you've got whatever's in the middle, the phone company, then you've got, then it has to come back to you. And so there's always something that can go wrong. And it's happened before where it just stopped, just Ninja just crashed. All of a sudden I'm in a trade, or get in a trade, or maybe move a stop or something like that, and then it's gone. And yeah, not good.
Thank you, Steve. Thank you, Steve, for those reminders. Really important. I appreciate it.
Sure thing.
Yep. Thank you, Steven, for that reminder of how trading success isn't just strategy, it's psychology and process. So check the chat for Steven's link to explore the Discipline Manager. And let's continue. Coming up now is Greg Capra, founder of Master Trader and a 30-year veteran of the markets. His presentation is titled Swing Trading Strategies in Today's Market. Greg will cover how to align multiple time frames, choose the right patterns, and apply his techno fundamentals method blending market internals, market analysis, and price action for high confidence swing trades. So please welcome Greg Capra.
All right. How you doing, Anthony? Well,
I'm
hello,
good.
everybody. All right, so we've got 40 minutes, and I've got a lot to show you. And you're welcome to ask questions along the way. I do my best to answer them. First thing I do is tell you a little bit about myself. If you're not familiar with who I am, been around for a long time. And then I will break down step by step what I need to teach you today so that you can start utilizing it Monday morning effectively. So we're going to talk about swing trading today. And as I said, a little bit about myself. I've been trading, investing, and educating for many, many years, as you can see here. I started out in the late 80s. There was no internet. Didn't know how to trade stocks, of course. Didn't know anything. And started on that process of trying to figure it out. Lengthy and trial and error. There wasn't much information back then. And after some time of that trial and error, learning, starting to figure it out, I met another individual back in the early 90s. Some of you may have read the book Trading for a Living by Alexander Elder. I was part of that group that he had, that first group of traders where there were hedge fund managers and specialists and not too many regular people like me. So it was, I say regular people, meaning we're all regular people, but I wasn't part of the industry. And so I was sitting there with a bunch of people that I thought were the gods of the industry, and quickly learned that they didn't know much of anything as far as technical analysis. It was quite an awakening. So around 1994, I started a fax letter, had a 800 hotline. That was a hot thing back then. One of the first chat rooms, there was no voice, we just typed. And trading offices, several around the country, did hotels. Master Trader used to be a brokerage firm, by the way. One of the first, if not the first, for retail traders. And eventually sold that. And the old company, I had a lot of old seminar recordings, and company at the time just wanted it so badly, and so I sold it to them. Took a little time off. I used to do trading challenges, won a bunch, stopped going to them. They've turned out, recently to be kind of shows for brokerage firms and software companies. And I said I taught hedge fund managers, market makers, specialists, lots of prop traders. Everybody wants education. How do I do this? How do I create a strategy, a formula, a trading plan, and so on? And you can go to my website. You can see a lot of names there that you're probably familiar with that are my past students. And it's a testament to, what I teach, and so many believing that it's helped them to succeed as well. You can check that out if you like. This is me over 25 years ago, in the middle there, quite a bit younger, of course. And I started what we called, T3, training, trading, and technology. That was 1999. The old company was called the Pristine Day Trader. That was the booth at the Trader Expo. And a lot of people would come. It was a hot thing at the time. And you could probably search the old newspapers and find articles about it. And all of the brokerage firms that have taken over the industry were telling everybody, stay away from that expo. They're day traders, they're gamblers, you're going to lose all your money. Now all you do is see advertisements from Schwab and Fidelity and all the others, come and day trade, so on and so forth. But yeah, now, that is, I saw something go away there, the industry. So let me continue. and tell you about my approach, the master trader approach. So after spending some time with the indicator-based methodology, struggling, saying, you know what, this stuff doesn't work. I removed all of those indicators and some light bulb moments started to go on. And this is the essence of trading and reading charts rather than looking at oscillators and fib lines and so on and so forth. What we are looking at is, a second here, am I online here? This thing is not changing. Is this working?
It's just showing the expo picture.
Okay. I mean, something flashed on my screen. I wanted to be sure that it was working. Okay. All right, cool. All right. You know, I get confused with this software that when I try and I'm sure you know, when you try and go to a drawing tool, it stops working things. So the essence of how I view charts, what is technical analysis? It's pictures of other people's beliefs and expectations created with money. It's not about haramis and dark cloud covers and shooting stars. It's about looking at a chart and displaying to the world, what are all these people placing trades on this particular instrument? What are they thinking? It creates price patterns, and those patterns tell us what other people are thinking. As it says, it provides us a picture of those expectations on an ongoing basis. So the term candle language, it speaks to me about what's going on. And it speaks to me in a way of even saying, hey, I fooled you. I call those shock patterns because we're never going to be right 100% of the time. And there are going to be times when things become erratic. So being able to recognize those patterns, I've also been able to utilize those to my advantage. Plenty of times where I've gotten fooled, I now recognize those patterns and use them to help me place trades that are in alignment with other concepts and criteria. So what are those criteria? Well, from a swing trading perspective, I call it techno fundamentals. And this applies to day trading as well, but not to the extent as a swing trading and investing. And it's based on technical analysis, what we do. Reading price patterns, trends, support, resistance, and entry points. Intermarket analysis is telling me, communicates to me, what is the effect of interest rates on stocks that I'm trading? For example, if you followed the 10-year yield and home builders and home construction stocks like Home Depot, what you find is they have a very close relationship to interest rates. And it's common sense. As interest rates go up, borrowing costs go up. People are less inclined to build a house. They're less inclined to borrow money. So interest rates are a critical part of the analysis. The price of oil is a critical part of analysis. Currencies. And so as we put those all together, they help us determine the likelihood of certain stocks and sectors moving in one direction versus the other, or everything aligned. And then there's market internals. And they tell us, I like to use the analogy, what's going on under the hood, meaning, are the broader markets as strong, as they seem? Or as I look at these internals, which is prevalent to what's happening right now, where you have a fewer amount of stocks that are participating, but the S&P 500 goes up, the NASDAQ 100 goes up, and other sectors are flatlining or doing nothing. So we need to keep an eye on that. And it's also for sector rotation. We want to take advantage of that sector rotation. Money gravitates from strong to weak, from weak to strong. And as the strongest get extended, money will rotate into the weaker and look to take advantage of those that can begin to show some relative strength and outperform, or what I call catch-up trades. So the three-legged stool gives us a very deep insight as to what's happening from the top down and how to take advantage of that. Now, we're going to talk about swing trading, and I also do day trading. You can do both. Now, you don't want to mix the two intraday because, and I'll give you a heads up, not heads up, but an example of what you've all done, because we've all done that. You're in a swing trade for the reasons that you believe you should be. You look at a 5-minute chart. 5-minute chart goes down 3 red bars. You sell. You're scared to death. Next thing you know, it's going back up again. Why did you sell? Nothing wrong on the daily chart, because you're looking at intraday data, which is not relevant to the time frame that you're trading. So the technical analysis, it's the same. The only thing we need to do is change the time frames. We can change the market internals that we look at, intraday versus swing trading, and that is viable to do, and we do that. And so swing trading is flexibility. I have frequent opportunities. I can trade, of course, there's thousands of stocks, and through that sector rotation, we could be trading gold miners, we could be trading coal stocks if we chose to. We can trade semiconductors, which are heavily in favor. Sometimes they go out of favor. Healthcare is the redheaded stepchild right now, but at some point, they've been trying to bottom. They're going to try and turn back up again, and the institutions will go back into them. So it's work. That is the work, what I call the factory work of monitoring that sector rotation and market internals and intermarket analysis. And you don't need indicators to do that. You just need the data on your charts. So no fluff, no indicators, just what you need is knowledge. Proven, systematic, time-tested approach. So some examples. Trend trading. We're primarily looking for the trend. I'm looking for directional trades for swing trading. If you like choppy markets, credit spreads are a good vehicle for that. But for doing swing trading, we're looking to get the biggest bang for the buck, that prices can move in one direction over a nice period of time. But we need to define where buyers and sellers are, what's the trend. We want to capture the middle of the move. We want to get in where the middle of that move is beginning to reignite. So as I look at those, and you're looking at this chart, you can see in the middle, there's a nice little rounding bottom right to the right of where it says advantages. You look up there and it begins to break out from that area. And so when it does that, I want to get in. Now I need to monitor what's happening. I need a method of interpreting what's happening on an ongoing basis, which I'm going to explain to you. So there's plenty of flexibility. And as I said, sector rotation. You don't have to watch the screens all day. Once you're in a position, you put your stop down there, you share size it accordingly. I'll show you that in a minute. And you just let it do what it's going to do. You can set alerts, for example, below a big wide range bar to be aware of what's going on. And you continue to monitor. So we can find plenty of opportunities, swing trading and long-term investing. And we can profit in up and down markets. We can short, of course. The sideways markets, they're going to have to be relatively wide for us to be trading those. But again, options are better for sideways markets. There are challenges. There's going to be gaps. So how do we deal with that? Well, earnings don't hold over earnings. It's simple. Don't trade those stocks. We know when they're going to come out. Right? There's plenty of free websites that'll tell us when they're coming out. So we just need to look at them. So we need to put this together in a systematic way. So we need multiple time frame alignment. With multiple time frame alignment, we're putting the odds in our favor. not only for those trends that are moving together, but we have other institutions or traders that are trading from different time frames. So as a swing trader, I'm primarily interested in the weekly and the daily time frame. I will look at the monthly time frame at the end of each month, but that bar is not done until the end of the month. So I'm looking at, as I said, at the weekly and the daily. The weekly is my big time frame, and the daily is my shorter micro time frame. And I'm looking for where prices are close to the 20 MA. Why is the 20? It's widely followed. I use simple moving averages. I don't need exponentials, and I'll show you a few others. So on this screen, what we are looking for is when they are in alignment. So daily and weekly pointing up. Ideally, the monthly would either be flat or pointing up, and I'll show you how to do that. But we're looking for them to be in alignment with each other. And on the smaller time frame, we're either buying breakouts or we're buying pullbacks, and it's sometimes continuation patterns. Now, on this time frame, we're also monitoring the swings. What are swings? Well, it's this flow where we call it swung up and it swung down, and it's swinging back and forth. And so as we monitor that, one of the observations that we have is the distance between these swings. Now, some may be using oscillators, and you've all heard the term a bearish divergence, where your oscillator makes a lower high and the price makes a higher high. Well, the distance between the swings will show you that, but slowing momentum doesn't mean the end of a trend. It just means momentum slowed down. Momentum can pick up again. So oscillators and indicators can be very deceptive. So you want to be careful about utilizing them at all. Now, advantages of trading with the trend, which should be obvious, but let's review that. There's a higher probability of success. It reflects institutional conviction. Right? You're trading with the flow. The odds are in your favor. I think we all know that. Right? Momentum works in your favor. Prices are more likely to continue moving in that trend's direction than to reverse suddenly, unless it's an earnings report, it's a Fed report, some shock to the market. Right? Easier trade management. Why? Because if the trend is up in multiple time frames, you have more individuals looking to buy the pullback, looking to get on board somehow through a breakout, some continuation pattern. You have more individuals with a similar bias. The only people looking to short that stock is either stupid, or maybe there's something they think fundamentally wrong with it, or it's become climactic where it's gotten extended and it's likely to pull back. So on a short-term basis, but primarily the trend, as it says, is your friend, because more people believe it's going to go up and they're going to be buying pullbacks. The more reliable sell-ups, as I said, consolidations, breakouts, continuation patterns, and they're easier to read. Less emotional stress. Go ahead and short a strong stock, or go buy some stock that's been going down because you think it's undervalued. You're going to feel stressed. The other place you get stressed is by a lack of money management. But what we're looking to do is ride the wave that continues. Let's simplify candlesticks. Okay? Keep it simple, stupid. We don't need the haram eyes, the dark cloud covers, the piercing patterns, the engulfings, and all of those names. Recognize big bars and little bars and tail bars. You can have little tail bars and you can have big tail bars. Big bars are emotional. They show commitment. They show taking control or losing control, right? Buyers lose control, sellers take control. Big bars show commitment. We're not talking volume, but if there's a big volume on that big bar, institutional commitment, there's a belief that if it's a big bar, it's going to follow in the direction of that big bar. Sometimes bars just narrow. It's a slowing in momentum. This is the key point. Where do they happen? Do they happen near support? Do they happen near resistance? Do they happen after an extended run? Do they suggest the beginning of a move or an end of a move? Remember, I said candle language. They speak to us about what's happening. So momentum is always increasing, decreasing, or continuing. And that's the simplicity of candlesticks. And I don't care what name you put on it. All you need to do is recognize, are they big? Are they little? Are there tails? And the location and the trend of where it's happening. And it'll give you a superior advantage. Let's continue to build on this. A pivot starts like this, 3 bars. Now a pivot of significance. There's 3 bars to the left and 3 bars to the right. Now I've got a pivot of significance. Gets a retest of the pivot. Even more significant. We call them W patterns, but it's building a larger area of support. Once it forms a pivot, I know that they're going to be buyers on a pullback to there. That's what I call a thought process. That's what we're building, a thought process of analysis in our trading plan. That's why those eyeballs are there. You look to the left to see if there's a pivot, some support there. And as it builds a larger area of support, eventually we look for it to break out, and that's the beginning of an uptrend, step by step. So how can we utilize moving averages to see what's happening in multiple time frames? And you could read there, how to calculate the bars and how many bars are in a lower time frame that make up a higher time frame. I mean, this is simple stuff, but it's good stuff. You multiply that bar by the moving average of the higher time frame, and you got a moving average in the lower time frame to use. Right? I coin them smart moving averages. It's a smart way to use moving averages. They really, right? They're just lines that we put on our chart. So a monthly 10 MA is the same as the 200 on a daily. 20 bars times 10, 200. It's simple. Weekly 10 MA, same as the 50. 5 bars times 10 is a 50. On the daily, we're going to put a 20 MA, a 50 MA, and a 200 MA. Now I know what's going on there in multiple time frames. So on that daily time frame, it's my guide to what's happening on multiple time frames, and I have a bias from each just by looking at the daily. Less information, simpler analysis, easier to read, bias happens quickly. Now, what's the direction of those moving averages? Great for trend trading. Where are the buyers? Where's the sellers? And they say capture the middle of the move. So on this chart, what we see is, right, if you start from the left, the 20 was under the 50. The 50 was under the 200. They were all pointing down. But the prices started to go up. That part I'm not interested in, where it's starting to bottom. I'm looking for the middle of the move. That's someone else's money on the left side there. So as it starts going sideways up there, after a retracement, it gets above the moving averages. The 20 is rising above the 50. These are still flat. That's okay. Pivots. Pivot, 3 lower highs to the left and right. It retests the pivot. I know there are going to be buyers there. Now, I don't know that it's going to go up. I just know there are buyers there. And it's a thought process. So as it starts going sideways versus down, and there's a resistance here, my thinking is, oh, the demand keeps coming. They keep buying it here rather than it's not falling from that resistance, because that's a pivot high. So that's bullish price action. Now when it breaks out from this area, that's buyable with a stop down here. Now it stops right away. I don't know what anything's going to do in the future, right? But as it goes sideways and it's at this next pivot, and I see these red bars which create hey, this thing might go down, and it doesn't. Bullish price action. Buy it again. As it starts going up, wide range bar. Raise the stop. Now you got to buy intelligently. Right? That's part of money management. It accelerates higher. Beautiful. It gets a little extended. It forms a pivot. It created resistance. Buyer should be there again. And it does. This is what happens when multiple time frame alignment is together. Buyers are at pivots. It's recognizable. This is what institutions are looking at. And maybe they're trying to fool you with the Elliott waves and the fib lines and the VWAPs and all the dark cloud cover nonsense. They're looking to the left. Bullish price action, and it continues until it doesn't. Trends continue until they stop. So another example, weekly, daily time frame, right? Down, monthly is up. How do I know the monthly's up? Because the red line is pointing up. That's the 200 MA. So there was a minor correction. The big time frame is bullish. It breaks down, takes out the pivots, and it rips right back up again. Little shakeout action right there. And this happens intraday too. Right? This is the algos taking out the stops, and it flips right back up again. Now, if you start reading the candles, look at that one right there. It down and back up again. Able to see. I read that question. I don't know. I see your question. All right. So Jeremy, that's hanging. It pushes up there, up resistance, bottoming action, 20's pointing up. What does that tell me? If I should get a pullback into support, I should be a buyer. That's a buy setup. It goes up, goes sideways. Why did it do that? I can't tell you. Meaning, could have been just an ugly day in the market. But what I do know, when all these moving averages are pointing up like that, odds are there's going to be institutions buying that gap down. Now, these are all what I'm talking about creating a belief system, right? The rising moving averages, the pivots, multiple time frame alignment, looking to the left. This is a belief system. Now, what I always tell traders and investors is be careful what you put on your chart because it's going to create beliefs. You have to create a belief system that's supported by concrete, fundamental, technical information, or what I call technical fundamentals. So this gap down could have been something more serious, but if it was, it wouldn't have popped right back up again. And so proper stop placement is also critical. If something more serious was happening, what does more serious happen? It breaks down. This red bar would have followed through to the downside. So, and it breaks out and it goes higher. And so at times there's going to be these kind of wiggles or hiccups along the way. And, you know, maybe it was earnings that were out. I don't know. I'm just saying, we all know things like this happen. The takeaway from this chart is when you see all these three moving averages pointing up again and support is over to the left, odds are there's going to be buyers stepping up there. Another example. Price support to the left. Always be looking to the left. And see what's there. Buyers are at prior pivot lows. That's a fact. Buy new support with a confirming pattern. And so as it pulls back to support, as it starts coming up, you're a buyer. Converging moving averages. This tells me that multiple time frames are coming into alignment. You can see over here, the 200 was pointing down, the 50 was pointing down, the 20 was starting to point up. This was a bottoming stock, whatever it is. I don't remember what it is. This was bottoming. And it breaks out above the pivots. Resistance, resistance, resistance. It gaps up. That's the beginning of a move. So at the beginning of a move, moving averages are relatively close together because the convergence of prices and pivots brought them together. As the trend continues, they begun to get further and further apart, but you just wash, repeat. Where are the buyers? At support, look to the left. And as it starts moving up, wide range bar, this is what we call a 1, 2, 3. As certainty comes in, where more and more traders become more confident about the trend, the moving averages begin to spread apart, and you get red bars that are ignored, and prices begin to accelerate to the upside. Again, it's a thought process. This works on everything. Some of you in here, if you trade bonds, if you trade Forex, if you trade micro E-minis, right? In my green room, we trade futures, we trade leveraged ETFs, we trade stocks, we trade options. This is a bond chart. It's traded exactly the same way because it's people who trade. The instrument changes. The human nature of who's trading doesn't change. So are the moving averages above each other? Right? The 20 above the 50, 50 above the 200, are they pointing up? Look at the candles, are there wide range bars? Look at the pivots. Now, pivots, these little arrows on this software, there were little arrows there. A lot of platforms call them fractals. It's a fancy name for what I call a pivot. All you need to do in your software is just go and set it to 3, the strength to 3, and it'll put these little dots on your chart. And you're set to 3 there, and you got the same pivots, and you can follow the trend and look to the left and support, resistance, tradable voids, and so on and so forth. So here are some key points. And on this slide is your success key, meaning in of itself, it's not a trading plan. But if you follow this, you're going to last. Meaning most people don't last because they have no concept of money management. And on the right side there, it gives you some basic guidelines. Whatever your account is, this is just a nice number to start with for the math of showing you an example. Right? Break it up. What are you willing to lose in a day? Break it up, and I'm just making up a guideline here. Break it up into 4 trades. If you lose 4 trades in a day in a row, you stop trading, which allows you, if you're going to lose $1,200 in a day before you stop, that gives you 4 shots to lose $300 on each trade. Then from there, you're going to share size accordingly based on how far away your stop is going to be. So if you $1 stop, 300 shares, 10-cent stop, you're trading a $2 stock, 3,000 shares. Figure in some slippage. For our swing trading, weekly bias, multiple time frame alignment, on your trends, your trade setup aligned with the trend. Longs near support. What was resistance should become support. Buy near that support. Short near resistance. Common sense. Most people, they're getting in late because they're chasing. Now the risk management and discipline rules, this is again the key. You need the risk management. Without that, you can't have discipline. You can't have patience. You can't have confidence unless you're controlling the risk. If you always feel like you're going to go broke because you're trading too large a position size, your psychology will never be right. Common sense again. We're on social media. We're on X. We're on Facebook. We're on YouTube. We're streaming every day at 9 o'clock in the morning, going over the futures markets, gaps of interest, market internals, credit spreads, our open trades. So every morning at 9 o'clock, there's no cost for that. You can just go to YouTube where it says /C Master Trader and sit there and listen, learn something, ask some questions. If you're on X, you'll see my name, you'll see Master Trader, and you can check that out. We put out videos many times, several times a week. You can check that out. Right? All right. what I'm offering today. I'm working on a course that goes really deep into candlestick analysis, fail patterns. And you're not going to hear about dark cloud coverage and Haramize. You're going to hear about price pattern recognition, trends, support, resistance, money management from a swing trading point of view, end of day trading point of view, with lots of examples of what's happening right now, with a presentation like I'm showing you today, plus many short videos that explain what's happening in the moment, how to manage trades, how to interpret trends, bar by bar analysis, and so on. And check it out, just mastertrader.com/best course. And the course will be selling for $1,000. But because it's not ready yet, it's 50% off. I'll have it ready next month, probably by the middle of the month. I'm still in the process of recording and putting it together, but you can read about the course there, and it's coming together phenomenally. So you can check it out. If you have questions, you could email me. And Anthony, I think am I over my time?
You have until 2:15.
So you know what? I could bring up, I was pushing, I lost track of time. I could bring up some charts because I have them open, and we can go over that since we have 10 minutes.
Yeah.
And just apply what I am talking about. Hold on. You're a quiet group. Usually we get questions. Let me just open up this. Oh, there's that last slide. As I'm flipping through there, you can see the image to that course. All right. Can you see the charts now?
Yeah, we can see the charts.
Okay. So in this platform I use for scanning, and you can see here on the left side is a daily chart. On the right side is the weekly chart. These are the cues. It's exactly what I've been showing you, and the dots are the pivots. And so exactly the same thing. Look to the left. This works on anything. Once it forms a pivot, that is where buyers stepped up before. 3 bars to the left, 3 bars to the right. Now, when it pulls back sharply like that, as I said, yeah, it's a bit of a hiccup within the trend, and maybe it's the beginning of a move from up to down. That we don't know. But we want to give the benefit of the doubt to the uptrend. So looking to the left, I know that that's where buyers are going to be. Now, did I know it was going to go back up like this? No. But I know don't short it here. Don't even think about shorting because it's in an uptrend. Don't even think about shorting it here. So as it moves back up, wash, repeat, pulling back towards support. I don't know that this is a pivot until 3 bars later, but this is one of our patterns. We call it a 1, 2, 3. Now it didn't trigger here. It went again sideways in another day. That's the buy. Now it pulled back deep. Where's my stop going to be? It's going to be down below this bar, a little distance below that bar, because things like this happen. Now on a gap down, I have rules for gapping against me. Meaning if something like this happens in a swing trade, I have rules for how to handle that in the morning. The first thing I'm going to do if I know it's gapping down is I'm pulling my stop. If I have a good till cancel stop. Why? Because I'm going to wait at least 5 minutes, if not longer, to see what happens, since I know it's at support. Now, as prices become extended a little bit, And this was an options expiration. Let me show you something if it's still on the chart. It's something I share with subscribers, and especially in the green room. These red lines are options expiration dates. Right? Every month there's an options expiration, and the black lines are quarterly options expirations. So for swing trading, that helps me because historically I know around an options expiration, this tends to be little reversals. Sometimes they're very meaningful ones, not always, but when the options expiration happened, my thought was it's been going up for a while. The short-term extended is likely to be some kind of a pullback. So everything is about a thought as to what might happen. Now, as it begins to pull back, look to the left. There's a pivot there. There should be buyers. A rising 20 MA, there should be buyers. Now, if you're a day trader, you're in the green room, you start looking for pivots on a 5-minute chart, retests to go long. It's another conversation. Now, as we go into this week, we all know that there's the potential government shutdown, there's going to be other economic reports, but the trend is up. And when am I going to know the trend is over? Well, if it violates this low here, say next week it breaks down here and violates, this is what I call major support, the low prior to a higher high, the uptrend is over. That doesn't mean it's a downtrend yet, but this is the systematic thought process. And from there, the next question is, where's next support? Oh, there's 2 pivots down there. Now there's some congestion here. Let's look at SPX, because this is where additionally you want to keep an eye on SPX as a trader, because these numbers, I'm just drawing here, 6,600 was the number that it was flip-flopping back and forth. And then, it reached 6,700, give or take. I'm trying to eyeball that before it topped out. So that was another piece of information, not only the options expiration, not only it being extended, but it was trying to push through another whole number on SPX. So when the pullback began, what's the trend? The trend is up. Where's support? Look to the left. No fib lines, no VWAPs, no Elliott waves, no dark cloud covers. There's going to be buyers down there. Now, from a swing trading perspective, we've got a bottoming tail bar. That proves to me that the buyers showed up. Now, we could apply this to anything. So on this page, I just picked, because this is what I had open here, but I utilize this for what we call a top-down approach, meaning we'd look what's happening in the broader markets, but what outperformed last week, what underperformed. So silver has been outperforming. It's been going up for a little while. This is part of swing trading, and what we do as swing traders, and of course, is we look for that sector rotation and then look at the stocks within there. Well, this thing stopped trading, but you see what I mean. So this one, right, silver was there this week as the best performer, but it's been going up for a while. So that in mind, you should be looking silver stocks, and this is a buy setup right here. Breakout, pull back to the 20, minus support. Medical instruments. Weekly trend is up. This looks like something that's getting started, but it's pretty erratic. So when you look at the candles, a lot of overlapping candles like this, it's kind of messy. Can I find something that maybe looks better? And by the way, layouts like this, when you become a member, I share these at no cost. If you use this platform, I have no association with this platform. And I've got scans within these layouts to say, is there any bullish wide range bars within those stocks? And there is not. Are there any bearish ones? There are not. Which are the best looking one, the most strongest ones? Oh, this one is strong. And there you go. New all-time highs. Big red bar ignored. I could probably find a better entry point, but you get the idea. What's the worst performer last week? Chemicals. And so materials did poorly. Lumber did poorly. You know, pharmaceuticals got killed. Tariffs on 100% pharmaceuticals that got tariffs. You heard Trump last week going to do more damage to them. Truckers and dealerships did poorly. Airlines. So home furnishings did poorly. So we heard about good GDP last week. This is the techno fundamentals that I cover in my advisory letter, which I was working on this morning to update subscribers about what's happening in the broader markets and sector rotation. And what we see happening is the news last week was positive about the economy. Yet, why are home furnishings going down, airlines going down, truckers starting to fall apart, lumber going down, chemicals going down? If you look at grocery stores, they're going down. All of this tells me that there is some holes in this economy below the surface of those numbers. Right? Those economic numbers look at the past. This tells me what institutions and traders think about the future. And the great thing about this is when I find something, no matter what it is, it loads the stocks that are part of that. And now I can start scanning for sectors or stocks within that sector. Now, gaps. Again, I share all of this with our subscribers. This is a gap layout. This one has lots of different scans if you're a credit spread trader. If you just want to find bullish wide range bars, there you go. Right? Watch, repeat. What I just taught you today. What's the trend? Multiple time frames. Does it have room to go up? Is there a pullback? So, folks, consider the course. Consider becoming a member of Master Trader. The knowledge that you will gain comes over 30 years of doing this. And I'll show you how to proper money management, how to find the setups. If you're a newsletter subscriber, we'll tell you which ones that we're looking at this week, this month, how to manage them through text messaging. We send you the management. In your member area, you have the tracking sheets, all the old trades, and it's a phenomenal learning experience. That being said, my time is up. If you have questions, email me, Greg at Master Trader.
Thank you, Greg.
Welcome.
Your framework gives traders a clear structure for tackling any market condition. Be sure to check out his link, mastertrader.com. And I'll put that in there again. So thank you so much for stopping by, Greg. We appreciate it.
All righty. Bye-bye.
All right. Next, we now welcome Jeremy Tang and Zach White of Shark Indicators. Their presentation is titled Next Gen Automation with SharkSignals. This is your exclusive first look at SharkSignals, a new platform that automates signal execution and position management across platforms like TradingView without having to stare at the screen all day. No code, always on, and user driven. So please welcome Zach and Jeremy.
Hi guys, I'm Jeremy. I'm presenting here from Shark Indicators. I've got Zach White on the line as well, and I just want to make sure I can first of all right, there we are, Zach. Perfect.
There we go. Yeah.
Okay. You guys should feel really privileged. It's not often Zach shows his camera, so yeah, so anyways, we're the founders of Shark Indicators. We've been around for a little while, and today we're going to try something quite different probably than what you're used to. And so what I mean by that is not only are we going to sort of go over a little bit about what we are working on, and what we've been sort of planning kind of silently without really telling anybody. So this is kind of the first time we're going public with this. But today is kind of really going to be all about you guys. That's why we're here. So I've talked to the folks at Traders Corner, and you know, I kind of proposed that we wanted to do something a little different. And in particular, we're hoping to open up this forum a bit and open up a discussion and make this more kind of about you guys rather than us. So you're not going to hear a lecture. You're not going to see any sort of you know, software demo, unless of course you guys really want at the very end with our legacy products, or rather sort of main products. I'm already calling them, I'm sorry. But really I'm here because I'm dying to hear from you guys. And you know, I want to kind of go over the new framework and the new platform that we're working on. And I'm really hoping you guys will participate, and this will make it sort of kind of a discussion format. So let's, guys, whip out your keyboards. Let's try this out. I'm gonna just sort of throw our first question out here, and just to see who's kind of paying attention, who's awake, just to see kind of who's going to be interactive. I'm just gonna go out and ask you guys, like, you know, how long have you guys been trading? Just feel free to type in the chat. Or the questions, it doesn't really matter. Hopefully I can see both, and I just wanted to test the GoToMeeting and make sure that I can see some responses here. So 10 years, okay, we got some responses here. Someone said 3 and someone said 15. Okay, you guys out there? Okay, this is going to be we're going to try to do again a discussion. So if you're just tuning in and or maybe sort of paying attention, I'm going to try to ask a bunch of questions to the audience, to you guys, and see if we can get some responses. Because again, I really want to today try to get to know you guys better. So I did see I saw a question. Sorry, I can see the questions, but I don't know if I can see chat. Has anybody tried messaging in the chat?
No, there's no messages in the chat yet.
No messages in the chat. Okay. As in,
I think everybody's using the questions.
The questions?
Yeah.
Okay. All right. Let's move forward for that. Let's see what we can do. All right. So I'm just going to go really briefly about who we are. We have been around for a little while. Shark Indicators, we founded that, Zach and I. It's been about 13 years now. I think we're kind of getting close to the 14-year mark at this point. But basically, we're the makers of Blackbird and Bloodhound, and we've designed these no-code interfaces for you traders that are using NinjaTrader, so that you can build your own trade systems without having to code. And you know, all our time kind of spent doing this has really led us down a real journey, a real path, and we've learned a lot. Let's put it that way. We've talked with a lot of traders, a lot of people like you guys, and now we're just sort of ready to turn a new page. Okay, so I'm going to put up the slide here with our obligatory AI generated image and talk about AI or auto trading. I guess the two are often sort of interchangeable at this point. Now, not to mislead you, but anyway, auto trading. Okay, so actually, many years ago, I think this is like early 2000s, so I'm talking, you know, nearly 20 years ago. I remember being kind of on a beach in Mexico, and I was vacationing with my family, and I had my laptop out, and I was like kind of wrestling with some positions in interactive brokers. And this is kind of the early 2000s, or sort of I'd say mid 2000s, close to 2010 to 2011. the Wi-Fi was a little intermittent, and I kind of remember struggling a lot to trading on vacation. It was difficult back then, but it wasn't so much because of the tech, but also because, you know, I had a lot of distractions. I got the family around me, and you know, we're on a beach, but still, there was a lot of distractions. It was virtually impossible, you know. And I sort of wondered that day, you know, wouldn't it be great if I could just, you know, manage these positions off my phone or something, or, you know, if they were sort of just managed somewhere else, and without having me to be kind of logged in and seeing them and manage them manually, right? And that kind of really started the whole journey of auto trading. Led me down the path of creating Bloodhound initially, and then eventually Blackbird, and really, you know, and that was because when I tried to do it, it was difficult. It wasn't really anything out there at the time. And so NinjaTrader was the platform we sort of placed our stake in, and that really kind of brought us to where we are today. So anyways, I kind of want to ask a question to you guys in terms of auto trading, right? So just to get a feel for kind of who's out there and what your experiences are. How many of you guys like would categorize yourself in one of these? Actually, go ahead and read these various options here, and feel free to just type in the chat 1, 2, 3, or 4, depending on where you sort of put yourself in. Are you a manual discretionary trader only? Are you the type that would maybe love to know how to auto trade, but don't know how, and so therefore you've never bothered? Or maybe you tried it but find it too complicated, and so therefore, you know, it's not, or maybe it's something you may revisit, or you're still trying. Or number 4, maybe you do it. And I don't mean full automation necessarily. I mean, maybe use some form of automation. Maybe use signal generation to get yourself in, but you manage your trade manually. Or perhaps the opposite. Maybe you get yourself, you either get yourself in automatically, or you manually get yourself in, and or maybe the trade itself is being managed automatically, or you're managing it. So some aspects of your trading. Okay. Yeah. So feel free to type in the chat or the questions. I think actually, to be honest, I don't think actually I'm seeing anything in chat, and I'm not sure if it's me. So perhaps you could, if maybe just put your responses in the questions.
Everything's going, yeah, into the questions window there.
Yeah.
So, and
I'm
yeah.
not sure. Okay, let's just see. Okay, I'm just gonna put hi in the chat. All right.
Yeah, so we have a couple. So we have somebody who's already doing, I guess, automated or semi-automated right now. And actually, they're an existing customer of ours already using Bloodhound and Blackbird. So great. And then John is manually trading. Yeah, which I'm sure, you know, still the majority of traders out there are probably still manually trading. So yeah, again, it depends on how intricate, you know, your trading system is, or your trading methodology as well. So, you know, trading is well, it's a mixed bag for sure, you know. So a lot of methodologies out there, just I guess just by the nature of it, can make it difficult to auto trade. You know, but and then of course the other would, yeah, can be automated, but it's a matter of finding, you know, the right software out there that can pull everything together, you know, so that you can fully automate it, or at least, you know, get close to as full automation as you can, you know, bridge that gap between manual and full auto, and have some kind of semi-automated system out there.
Yeah, and that's precisely kind of like, you know, what kind of drove us to build these tools, or explore this space, I should say. You know, it's quite difficult. If you're basically not a coder, it's very difficult to come up with you know, an auto trader, and you know, so that's what kind of got us again to where we were in terms of building Blackbird and Bloodhound. You know, some of the challenges that I've heard over these 13 years, you know, is things like it's difficult to set up, right? Even our tools, you know, admittedly, it's on the NinjaTrader platform, so you have to have a certain level of sophistication already just to be on NinjaTrader, right? That's not for everyone. I'm gonna bring my mom into this, for example, that my mom would not be a person who would enjoy using NinjaTrader, although she does trade. Maybe not daily like some of you guys do, but you know, she manages longer term positions. You know, she even does fancy stuff with options, like fancy for, you know, like depends on who you're talking to, right? But you know, she'll do covered calls and that sort of thing. And so you know, like, you know, with an auto trader, especially if you got, you know, with sort of a lot of the tools out there, including ours, you got to sort of locked on a desktop platform. And where that becomes really challenging is when you want to take much longer term positions, right? So this auto trading, you know, is difficult enough to master, or rather, I would say even just regular trading is difficult enough to master when you're sort of doing intraday trading. And sort of as you expand your time horizon, your time frame, you know, the challenges change. And arguably, you know, and this is just my observation, right? You guys may have a different experience, but arguably the longer the time frames are, it's actually a little more accessible, right? It's a little easier, but that is more challenging for auto traders, right? If you ever used even our products, say, and you try to use them overnight and just carry them forward, or maybe on a daily basis, it is actually quite challenging. Your computer's always on, right? There's all sorts of things that could happen during the day, right? You know, so those are the things that we're tackling, right? And so this kind of brings me to another question I'd like to ask, right? So for those of you that I would say either the 3 or 4 camp, okay, as a couple of you here, what do you find is some of your biggest frustrations when it comes to auto trading? And say if you're not in the camp that's trying it out, yeah, I'd love to hear from you too as well. Let me know what's holding you back, or is it, you know, you just have no interest in it because you don't believe perhaps it would be successful? Is that's a legitimate answer? You know, I just want to hear from you guys, and I want to bias kind of anything. So I'm just going to take a moment here to read through the responses. And thank you guys for participating. I really do appreciate it again. Yeah, again, this is we're trying something new, and I'm really trying to see what we can get in terms of listening out to the audience and see what we can glean and learn from you guys. Okay. Yeah, optimizing and back testing takes a lot of time and effort. That's someone commented that. Someone commented that the Blackbird and Bloodhound, which is the tools that we do make, are pretty complicated, and that's totally legit. And actually, that's actually something that's always been kind of in the back. That's always been something I guess I've been aware of. Is our tools, I've been told by a lot of people, are very sophisticated, but also the learning curve is pretty challenging, and that actually holds a lot of people back. And totally legit. I think that's one could be an absolute barrier to adopting it or even trying it out. Figuring out which time series are good for certain futures. Yeah. Okay. So I guess that's more of a question of what you know, you're still trying to figure out what to trade really, on what time frames and what instruments. I mean, yeah, it's pretty. Like I say, the ocean is vast, and there's just a lot of different possibilities when it comes to trading in general, right? Maybe if you're a beginner, you just started out and you've heard about this idea of trading, you know, and then once you start diving into it and you realize how deep it can go, you know, and we've also seen that too with vendors and educators like how much of a mastery it takes just to learn how to trade. That was something, I'll be honest, like that motivated me a little bit to engage an auto trader, was because I'll just straight up say, you know, I like to tell people I'm actually it's weird to say I'm a lazy person, but I kind of am, because you know, I'd rather spend a lot of time and effort into building something that could mean I'll save time and effort down the road. So if I could build an automated trade system to do the hard work for me, then I'll put the effort into that, so knowing that I won't have, I can save it kind of on the back end. Right? So okay, so thanks for your answers. Yeah, it's, you know, that's kind of in line with, I think, a lot what we're thinking. But yeah, this is again, this is something that we're working on, and that's basically we're calling it SharkSignals. And the idea behind SharkSignals is it's going to allow you to do auto trading, but it's going to run the cloud, and it's going to be 24/7. All right, and for those of you that know us and are familiar with the products, you'll know that we run on NinjaTrader. And so what we're going to do is actually tie in TradingView. I'm sure some of you, how many of you guys actually use TradingView? Actually, let me just ask that. Type a yes in the chart, or in the chat, or in the questions if you do.
Right, that's the important question here, right?
Yeah.
To get things started here,
Yeah.
How many people are actually using TradingView, and also looked into their, you know, all those thousands of indicators that generate trade signals, or even strategies that generate signals.
Mm-hmm. Yeah,
So,
or even just to log on to see, like, how many of you guys have longer term? Like, I'm imagining a lot of you guys are probably day traders, intraday traders, right? But of you people that do have, are, you know, consider yourself day traders, do you also have like more long-term positions, maybe you know, stock portfolio that's meant for retirement, and you know, you don't trade in and out on that? I think there's even regulation against that sort of thing, at least where I am in Canada. If you start day trading your retirement accounts, that's considered income, and then there's rules against that. So how many guys actually do that, but also have kind of in the background a much longer term trading horizon, if you will, for retirement? Day trader. Okay. Yeah. Okay, so it's no surprise that TradingView is mentioned quite a lot. I mean, it's got 100 million users. I will say, and you know, thanks to MJ sort of mentioned that, pointed out there is definitely a lag from TradingView alerts. Okay, I will say that TradingView is a possible mechanism to use with this SharkSignals, but it's not. It doesn't mean you have to use it, right? It really is what we call a general purpose API. And I'm going to geek talk for a second here. That really means that you can plug anything into it. It just so happens TradingView is probably the most well-known platform out there. And so being able to talk, building our product that we're working on, it can really talk with anything. It doesn't have to be TradingView, but TradingView happens to be large enough that when we say it, people understand what we mean. Okay, so the idea behind this is we're going to start with a simple pipe, right? And allow people to take TradingView signals, right? And again, or from anywhere, doesn't really matter, but TradingView being kind of the easiest one to grasp, and pipe them through SharkSignals, and I'll explain, you know, kind of what we kind of do in this little magic little box, and then pipe them to NinjaTrader on your desktop through Bloodhound, which obviously will mean that you can actually drive signals to our current products, Blackbird and Bloodhound, where you can do a lot of automation there. But that's not all, because you know, not everybody, as I think somebody pointed out, is too crazy about the idea of the complexity, again, of trading in NinjaTrader, and the complexity of setting all that up, and even the complexity of our products, right? So instead, what we kind of propose to do is actually support a variety of connections, right? And so I think if I had a little more time, I would have put sort of on the top more connections from the top. But basically, you can have connections coming in from, or signals generated from pretty much any source, and then pipe it through SharkSignals, and then you can use that to drive behavior eventually to establish positions on your favorite broker. So that leads me to the third poll, which, you know, I'd like to see kind of what's out there. What brokers do you guys actually use? And sort of this feedback we can sort of drive, we can use to drive the development effort towards certain, you know, onboarding certain brokers before others. So if you don't mind, maybe just put in the chat there what brokers that you currently use. And I mean, you can include your longer term positions or longer term retirement accounts if you want to, because those are all kind of fair game. As far as I'm concerned, right? So we have a lot of sophisticated users here. We got a fair bit of NinjaTrader users. If you are a NinjaTrader user, what other brokers do you have, say, accounts at? You know, so we have
looks
Schwab
like
and yeah.
Looks like the big common ones are coming in. You know, like the big brokers like Schwab and E-Trade coming in. Yeah, and then there's a few futures, interactive brokers. Yeah, I mean, they're big, they're worldwide. So, and of course, the NinjaTrader futures broker. So, yeah, all the usual suspects are coming in here. Oh, yeah, EdgeClear. Yeah, I haven't, I don't see much about EdgeClear, but yeah, EdgeClear. Yeah. And Tasty. Yeah. Yeah.
Cool. How about
Trade.
cryptocurrency? Do you guys, any guys do cryptocurrency? Coinbase. All right. Yeah.
Okay.
Yeah. I mean, I think once you're kind of in the game, you'll probably have several, right? More than one. Apex. Yeah. Great. Thank you. This is great. We're starting to see like more interactivity and more responses, and I'm very thankful for that, guys. Kraken. Yep. Do you guys know Kraken bought out NinjaTrader earlier this year? I'm not sure if you guys are aware of that. Yes. Okay. All right. Some people don't do crypto. All right. Cool. Thank you, guys. All right. Some people say they're afraid of crypto, or not afraid. Sorry, actually, don't want to focus on that. I think crypto's a very strange animal. But I mean, and I'll be honest. Like I was stuck in my ways too. I'm like, I don't trade crypto. I don't ever want to kind of go there. It's not a legitimate instrument. But in the end of the day, it's got value. It's got, you know, it behaves just like a market. It's very unpredictable, I suppose. Very volatile, which I think a lot of traders actually like. If you're into volatility and you like to make money in volatility, you know, crypto's totally legit. It's very liquid. But really, it's again, it's just an instrument at the end of the day. Forex and MetaTrader. Yeah, I was actually waiting for someone to mention MetaTrader. Yeah, and from what I understand, MetaTrader is larger and it's been around longer than NinjaTrader. Correct me if I'm wrong. Okay, well, thank you guys. Right, so I'm going to talk a little bit about that little orange box, SharkSignals. What's inside of it? And the gist of it is you'll be able to take in signals from any source. You know, I've got TrendSpider up there, and this is a concept, guys. It's not a shot of the actual software. But the idea is if you imagine TradingView, it's got like literally thousands of indicators, like maybe it's hundreds of thousands. I don't know. It's a humongous community of hundreds of thousands of indicators and also strategies and you know, it's like a trader's playground, really. And so you know, if you found your favorite ones or good ones that you like to use, and it's on the web, and basically you'll be able to tie those in, and there's other tricks too, but you'll be able to tie those in, pipe them into SharkSignals, and then enhance them even further using logic. And this is sort of bringing, you know, our expertise of many years of tying these, basically building logic board systems, and then also imbue things like money management, risk management. I'll get to get to that in a bit, and then pipe those out to as many brokers that you may have, right? So where I kind of envision this, and this again, it's going to all depend sort of on the market in terms of the feedback that we get and development, and you know which the priorities are, but I can sort of see it as targeting the slightly longer term investments, the swing traders. And a lot of you guys may be swing traders and probably don't even realize it, right? If you happen to take a position here or there once every couple months or even a couple of weeks, because you've got an inkling of a certain stock, you know, I think we're all kind of guilty of dabbling a little bit, right? You know, or maybe maybe you aren't, maybe you're extremely disciplined. But I think, you know, the vast majority of traders probably have some sort of side account, or even I would maybe in their main account, or main retirement account, where they do like to put positions on with a much longer term horizon, right? Now I'm going to bring my mom into this, right? I would classify her as one of those people. She's a retiree. She's in her 70s at this point. She's got a pretty good nest egg retirement account, and she loves to do she loves to do covered calls, right? And those, but she has to log in, and every time she has to do it, she has to, you know, pick the covered call, and there's no automation. Is what I'm saying. It's all manual. And then she has to sort of have the discipline enough to go in at the right time and continuously do it, right? And those are kind of opportunities. I think those are like kind of lower tier but easy wins in terms of people that have a very simple trade plan, but they just need to execute on it and have enough discipline to stick with it for a long time, right? Right, and all the while maybe you're day trading on the side, and that's taking up most of your focus, or you got a day job, right? I think the vast majority of you guys in here are probably, you know, in the day trader camp, right? So anyway, that's kind of the idea behind this, right? And in particular, we want to be able to pipe out to multiple brokers, right? The other thing that we're very excited about is the idea of imbuing a lot of our experience in building in money management, right? So those of you that are familiar with our products and have used Blackbird before, you know, a lot of this stuff will look very familiar to you, right? And this is the stuff I think is kind of largely, you know, I wouldn't say neglected, but it's sort of like it takes sort of a backseat. I think that's the easiest way to say it. A lot of people really focus on the signal quality, not necessarily, you know, sort of the wider perspective in terms of looking at their account, right? But that's the thing that hedge fund managers do, and they have teams doing this sort of stuff, right? And they have daily limits, daily win-loss limits, or even monthly ones, right? Longer term ones. You know, even sector allocation, right? If you're in the stocks, not in the futures, but if you're in the stocks, or even actually even your futures, there's different types of commodities, right? And sort of pre-planning the risk you're going to have in certain sectors or certain types of commodities. You know, figuring out what your risk per trade is, and before working all those parameters out and making sure every one of your trades kind of fits into this larger plan, right? And so what we want to do is sort of build basically build those capabilities into SharkSignals so that you can have that overarching look, right? And so, and it can do that because you'll be looking into, you know, you'll have awareness of your positions and awareness, therefore awareness of your position sizing, and then all that stuff that you've inputted and you've set within it. The third thing that, again, this is sort of bringing our experience from Blackbird into this, is the idea of some sophisticated exit strategies or exits, right? Again, I've been touting this for years, you know, and this is really from what I've seen, and also from what we back tested and what we've optimized, and you know, it's very clear you can absolutely change the performance of your strategy just simply by managing it well, and that means like you're managing your break evens. You're going to break even whenever possible. Managing the exit of your trade, perhaps even using some sort of logic, right? A lot of things that we've seen over the years traders going in and actually manipulating their stops and profit targets on the fly based off of maybe what they see in the market, right? Is really just, and if you're sort of pre-planning all that stuff out, the idea would be that you can be a little more hands-free with that. You don't have to be glued to a monitor all day. And then also things like risk reward and ratios and scaling in and scaling out. We want to sort of bring that into the mix as well. So that kind of leads me to my fourth poll question, which is, of those kind of features that I basically talked about, which ones appeal to you the most? And that sort of will help us prioritize, where to focus our efforts on the development side and which ones to really flesh out. So if you were to envision having an auto trader, whether that's kind of like short-term positions intraday, or perhaps longer-term positions, over weeks, perhaps even months, which of these would you consider being, kind of more important to you? And you can go ahead and put in the number 1, 2, 3, or 4. Okay. All right. So some people say definitely the order management, right, for daily trading. Yeah, absolutely. Actually, we got a couple bullets for order management. That's great. Yeah. How many of you guys do? And I think I do have this kind of somewhere further down, but okay, 3 and 2. Okay, yeah, order and money management. Yeah. Okay, yeah. I mean, looks like we have a pretty clear winner here, actually. Yeah, it looks like a lot of people value the order management, and that's great, guys. Thanks. It often, not until I ask the question and ask you guys, customers and your traders out there, do we discover these things? And it's great to hear. So that we know where to focus.
Yeah, I think order management was kind of our assumption there going into this as well, Jeremy, right? Because yeah, as you always say, the way order management can even take a bad entry signal and at least get you out at break even, or maybe ink out a little tiny bit sliver of a profit there. So
actually, I'm really curious to hear from is you folks, if you happen to be interested in automating, say, a longer time frame. And I get the kind of impression a lot of you guys are that did answer happen to be day traders. But suppose you imagine yourself kind of like, maybe also using this for your retirement account, or if you happen to be in the camp where you take positions on a longer time frame, like monthly, weekly rather, right? If that was the case, what would you say is more important to you? Let's just see if that changes the perspective. I'm very curious, actually. Yeah. Well, it looks like we don't have very many long-term traders in here. Yeah. Okay, we did have somebody piping in. Probably 2 for longer term. Yeah. Okay.
Yeah. I don't think we got any kind of. Oh no, that's right. No, you did ask earlier up if people were day traders or daily swing traders or whatnot in here.
Yeah.
So.
The tricky thing is, I find, is I think like swing traders probably don't identify themselves as swing traders, or maybe even haven't heard of it. But I would say the average, maybe you guys seem like a very savvy bunch, right? So this may be a little bit biased, right? But I'd say the average person, again, I'm gonna bring my mom into it, right? So the average person, like my mom, I would characterize her as a swing trader. But if I asked you, are you a swing trader? She'd be like, what are you talking about? I have no idea what a swing trader is. Never heard that term before. But that really just means that someone that's on a different time horizons, right? Or okay, maybe there's a little bit more to it in terms of sophistication, but in general, like if your time horizon is weeks or months, that's basically the realm of swing trading, right? So, okay, okay. Another thing this is really, I guess, this is where I'm really looking for some help, guys. Copy trading. It's been a real thing. for the last, I'd say, year and a half. That's when I started really hearing a lot about it. And I'm, being kind of maybe a little old school. I really want to know what do you guys use copy trading for? What is the main benefit behind it? Because I'm still trying to wrap my head around it, the concept of it, and why people do it. So if you don't mind, and maybe in the Q&A, you can kind of answer. If you happen to be interested in copy trading or do copy trading, let me know. What do you use it for? Prop trading, okay. Yeah. Manage timely exits. I'm not sure if that was for the last one. Reduce risk by using multiple accounts versus, okay. I'm curious, and I don't know if sure, just in case you don't want to be named, so I won't name your names, but I'm curious if you happen to be the individual that did mention you'd rather spread your risk on multiple accounts. Is that because of the prop trading parameters or restrictions or whatever have you, or is that something you do with your normal accounts? Okay, so yeah, it looks like a lot of you do it for the prop trading. And sorry guys, I'm just reading the responses here. You can easily move every call to the other accounts for prop trading. Yeah, prop trading. Okay. Prop rules. Okay, I understand. Okay, so copy trading is, so would it be fair to say copy trading is mostly used for prop trading? Is that a fair statement to say? Like would a regular trader, when I say regular trader that's not interested in prop trading, would they ever have any use for copy trading? Okay, someone says 100%. Okay, all right, I understand. So prop firms and copy trading has been quite a rage for the last couple of years, and that actually leads me into the this leads me into the other, I guess the other question is about prop trading and prop firms. How many of you guys actually do it? And if so, do you trade them manually or do you trade them using automation? So 1, 2, or 3. Yeah, thanks guys. This is really helpful. Okay, so someone sort of mentioned that, yeah, there's actually a huge number of prop traders. Someone says a very significant number. From another webinar that was attended, they said that it was 70% of the audience were into prop trading. Okay, all right. Yeah, actually quite a lot of you guys are, absolutely. So that's fantastic, guys. And that really tells me the sophistication of this audience. So you guys are very sophisticated. Yes. Okay. Okay, someone does say they do not use them. Maybe because it's a little gamified. I've definitely heard that before. Yeah, a little bit gamified, and I think what this person is saying is the game's maybe a little bit rigged. I've definitely heard that as well. Okay, but regardless, there's definitely a lot of you guys in here that have tried it or do it. Okay, all right, great. So suffice to say, prop trading is still very popular, and a lot of you guys do it. Okay, I'm going to open up for kind of an open Q&A. Oh, I just realized we're getting pretty close to our end here. I'm sorry, guys. I'm going to speed through this a little bit quicker. Okay. Okay, this is just an open discussion. Just type what you feel, what comes to mind, right? And I'm going to just kind of put a little framework around it, right? And a couple questions out there. You don't have to answer all of them. Just if something comes up, please do mention it. I love reading your responses.
Is this the homework portion of the webinar, Jeremy?
I'm going to speak through because we're running out of time here. I'm going to be quick Perfect. Okay, so I've got a question here. If you had a dream automation tool, you haven't found it out there yet, what is it? What would it be? Okay, you know, think about that for a second. Here's another one, right? Between saving time, removing the emotion through the trade, or evaluating your performance. So I understand evaluating performance is quite important for prop trading, right? Because you kind of have to know if you're within the bounds of the contest. What is a more important thing for you? Again, and this is sort of me, and this may not be the question for you guys because most of you guys seem to be day traders, but how many of you guys actually trade options, covered calls, or maybe more sophisticated things like the last presenter was talking about, like iron condors and butterflies. I didn't see the whole presentation, but I do have a little bit of option background myself. But I'm just curious how many of you guys are actually in that game, in that realm. And then timeframes. Let me know. Like, are you all daily, or do you do actually some weekly, monthly trading, like time horizons as well? Okay, so I'm gonna just quickly browse to the chat here while I kind of go off and wrap up. We're about to wrap up here just before we run out of time. Okay. All right, I do see some great responses here about a lot about removing emotion. Seems to be a big one. Yeah. Back testing. Okay, I understand that that's holding some people back when it comes to doing the auto trading. That's totally fair. Back testing. Totally understand. Somebody's asking what software you're offering today. I want to be clear. I'm not offering anything today. There's no launch, nothing here. You know, this is, again, we're trying what we call a customer discovery, really just trying to get the feelers out there, try to understand you guys, what your needs, your wants are. Oh, MJ did. Oh, I'm sorry. I didn't mean to say the name. Somebody does weekly options. A lot of you guys do only day trading. Okay, so I'm going to just very quickly get into the end of this, just so that I can hopefully open up a channel of communication with some of you guys that really like to pipe in. Again, I'm really, really thankful. We are deep in development right now of this new platform. So this is kind of the general roadmap, and I understand there's not too much to glean from here, but that's on purpose because, you know, things are very fluid and things could change. But we are planning kind of a closed alpha launch next year, early next year, and we don't have quite yet a set a date for the public launch. But I do want to invite you guys to join a wait list, and really, I promise we're not gonna pecker we're gonna pester you with you know, buy this and buy that. You know, that's not the purpose of this. This is really just I want to hopefully, you know, open up a dialogue with you guys and ask what you guys are looking for, what do you guys need, you know, to find out some more information so that we know we're building the right kind of product. And you know, as kind of an incentive to that, we'll be offering early exclusive access so you can sort of help shape the platform. And not determined yet, but you know, the idea would be to give you some access to kind of what we call like founder pricing, or pricing that's advantageous, or sorry, you're gonna get good discounts when we launch, is what I'm really trying to say. Okay, so basically, if you go there, that should just take you to sharksignals.com. We just got kind of basically a very basic page up there right now that just explains a little bit about the philosophy and what we're working on. But really, just feel free to join that wait list. It'll just tag you in our system. If you're already in our system, it'll put a little tag next to, so we know that you're interested, and then we can reach out to you. And you know, I really look forward to talking with some of you guys and digging a little deeper and seeing kind of how we can improve this platform and make it something that would be more interesting for you guys, or just to help serve you and solve your needs.
Yeah, so I guess we just kind of summarize here for everybody. You know, in my observation, NinjaTrader, you know, a desktop application is superior for intraday trading, where really you're doing more like scalping, right? Or you know, your trades only last for a few minutes, right? Thus the nature of intraday trading. Right, and of course the the limitation with the desktop application is you can't really do, I mean, you can, but there's limitations with doing daily trading, daily and weekly trading, right? So if you want to trade stocks on your desktop app, you know, there's a lot of inherent limitations with that. It doesn't matter what platform you're using there. So this SharkSignal is, yeah, I think it's fair to say the SharkSignals will be geared towards those who want to do daily and weekly kind of swing trading, right? Because TradingView being in the cloud, right, it's always on, and SharkSignals is also going to be in the cloud, so it's always on. So therefore, it's optimal for those who also are doing the daily and weekly and or monthly kind of stock trading, and heck, you could even do, you know, micro futures trading as well, right? I'm sure a handful of you, even myself, you know, I will go in and buy 1 or 2 micros and hold on to it for, you know, a month or so, you know, whatever the situation might be there. Yeah, so just to kind of just to kind of say it out loud as to, you know, what products are good for what type of trading there. And so far, you know, I haven't seen anybody, any platform who's really good at doing all of the different time frames. You know, so if you're that intraday trader, you're probably you're going to get a much faster response time if you're using a desktop application. You know, but then again, if you're wanting to automate daily and weekly type of swing trading, right, then you want to move to the cloud, you know, where your charts are always running, you know, and whatever kind of money management such as SharkSignals, you know, is always on and always running there. So you don't have to worry about turning your home computer off, right, and shutting your software down. Yeah, so.
Yeah, and I mean, for those of you that do own our other products, know that they're very geared for the intraday trader, and really, what excites me is kind of bringing the risk management and the order management and the money management to kind of a higher time frame level. I think that I think is something I haven't seen out there yet. So that's kind of the new ground that we're really trying to break. Okay, we went a little bit over time. I'm terribly sorry, guys. But Anthony, if you want to kick me off now, that's fair enough.
I slipped the link in there to the SharkSignals, and I'll put it in the chat as well. Let me see, make sure it's to everybody here. Entire audience. There we go. Okay. All right. Yeah. So there's the link to the SharkSignals introductory page there. So yeah, and of course we always appreciate, you know, all your feedback there to help guide us as to, you know, what features and capabilities, you know, are most important to you guys as traders there.
Yeah, actually, Zach, I think you linked the original, or there are current products out there, but that's fine. I actually did put SharkSignals. It's sharksignals.com if you want to sign up for the wait list. If you're interested in the day trading products that we've been selling for many years, that's at sharkindicators.com. Oh. So 2 slightly different, yeah. So SharkSignals for the new one, and Shark Indicators.
Actually, yeah, I copied the link that Keith put in there for something else. Oops.
Yeah.
Okay, there we go. This second link.
Yeah, I see a few of you guys have signed up, so
yeah,
I'm sort of expecting to get kicked off any moment here, because I think we're almost 10 minutes over now. So I think the next presenter is probably good and ready to go. Let me just check.
Thanks,
yeah,
guys.
Anthony, I'm not sure if you're there, but
yeah, we're here.
Yeah, okay.
All right.
Yeah.
We're gonna sign off now. Thanks a lot, guys, for listening to us and taking the time. And also thank you so much for your feedback. It's really helpful.
Yeah, we greatly appreciate your feedback.
Yeah.
incredible presentation. Thank you, Jeremy and Zach. This is a much watch replay. If you're ready to automate smarter, please watch this again. There's a promotional link, so make sure to check that out as well. And now to close the day, our final speaker today is Rory Powers of Right Line Trading. His presentation is called How AI Bots Can Transform Your Trading. Rory will show how AI-powered bots can remove emotion from your trading and deliver consistent execution across any market. If you've ever sabotaged a winning trade, this is the technology that can finally change that. So please welcome Rory Powers.
Hey, thank you, Anthony. I really appreciate that. Very nice introduction. Thank you.
Thank you.
It's always great to be on Traders Corner. Thanks for having me. I'll tell you a bit of deja vu. You know, here we are coming into the fourth quarter of 2025, and you know, it's the end of September. We got Hurricane Gabrielle off the coast of Florida here. The Dolphins are 0-3, and it's just another year. It's good to be here. It's always a blessing. Any day above ground is a blessed day. So thanks for having me. I have a really great presentation today on our AI auto trader. It's really come a long way. And if you've heard the presentation before, stick around because I've got some new information, some new updates that are going to be coming out here in the next couple of days. The topic of my presentation is, we call it the ultimate edge for futures traders. So stay tuned. Before I get too far into the presentation, I just want to get the CFTC out of the way. It's important to know that we're not offering any type of trading advice here today. I'm not a licensed financial advisor, and there is a significant amount of risk when you trade the financial markets. If you're not familiar with those risks, please consult with a licensed financial advisor. You know, I think one of the characteristics that distinguishes Right Line Trading from a lot of our competitors is our transparency. You know, we trade our software live on YouTube every morning for the whole world to see. And we trade both our future systems and our options trading system called the SPY Super System. And I'm going to invite everybody here today to come join me on Monday on our YouTube live stream. Our mission here at Right Line Trading, we've been around for about 14 years now, is to help provide our members and ourselves, because we are traders, with an edge when we trade the financial markets. What kind of edge? Well, you know, we believe that we have indicators that help predict the future direction of price. Is this the holy grail? No, by no means. However, it is a tool that does provide you a significant edge when trading these markets. Along the way, over the past 14 years, we've really built a beautiful community of traders of all skills level, and starting from the complete newbie to the far left to the professional trader to the far right. And this is what they do full time, is trade. And every experience level that falls in between that broad, wide spectrum. I want to take just a minute to acknowledge the members of my team. It's important to know that it's not me here alone pulling the switches and flipping the levers. I'm part of a really educated and experienced team. I'd like to think good looking too. But very briefly, as I mentioned earlier, we have two main equity streams here at Right Line Trading. We have futures and we have stocks and options. So I'm going to first introduce our futures traders, Mr. Craig Emery and David Kushner. These guys are extremely patient and disciplined. They look at the technicals. They don't make decisions based on emotions. And when everything lines up perfectly and the software provides them the signal that risk is at its lowest and their potential for a winning trade is at its highest, well, that's when those guys pull the trigger. And Mr. David Wise is our professional options trader. And I tell you, I just, have so much respect for David because, I've traded options before and it's just, man, it's just, I just can't, pull 2 or 3 winning weeks together. It's like, you take a winner, then a loser, a winner, and then a loser. Well, David is the exact opposite. You know, he has a 90% win rate, and he amazes me because he does the impossible day in and day out. And, you know, it's like an everyday thing for him to just, you know, pull out a 90% win rate. So I'm really amazed by his win rate. And if you're into trading options, I highly recommend checking him out. Anyway, behind the desks here at Right Line Trading, we have Mr. Brock Miller. He's our college student. He's getting his degree in computer science. And we've got some really experienced software developers, coders, engineers. Mr. Sergio Luque Rodriguez. I've worked with Sergio for about a decade now here at Right Line Trading. He's become a dear close friend of mine. And let me tell you, Sergio can make just about anything come to life on a computer. He's just incredible. He has that God-given talent. And there's, you know, it's not an easy thing to do. I've seen him progress with his skill level incredibly. When I first came here, he could barely speak English. When he first came to Right Line Trading, he barely spoke English. He's from Cuba. He's a Cuban American. And he started coding complex mathematical equations to algorithms to mathematical modeling. And now he's progressed to the next level with artificial intelligence. You see, he was the main benefactor, well, really our community of traders were, of a collaboration with a world-renowned AI lab. And they really taught Sergio, you know, what artificial intelligence is, how to put it into computer language, and how to code it. And man, let me tell you, to see him progress the way he has really been a privilege. The team is led by Mr. Mark Miller. He's the owner of Right Line Trading. Let me just mention Sergio's credentials. Let me back up. Sergio has a master's degree in computer science. He's very highly educated, brilliant guy. Mark Miller has his MBA from Cal State. He's a U.S. Army vet. And come to find out, his experience lies in automation and robotics. He's an engineer with an MBA from Cal State. So I think what impresses me, or what I love the most about Mark, are those core military values. Yes, I'm very patriotic, but it's those core values that I really think are biblical, where they stem from, of being honest and transparent, and having integrity. That's what Mark Miller brings to the forefront of everything that we do here at Right Line Trading. The voice that you hear behind the screen, I just want to briefly introduce myself. My name's Rory Powers. I reside in South Florida. I'm a graduate of Syracuse University, and my passion is not only trading the financial markets, but I love saltwater fishing. Guilty as charged. I love to go saltwater fishing. I live all the way down by the Florida Keys. This is a recent picture of Mark Miller, Sergio, and myself. We took a fishing trip down in the Keys and caught some beautiful snapper and grouper. The boat gets back to the dock and they cook them up right in the restaurant right behind us. And it's really the most delicious, freshest fish or seafood that you could get. And you know, just like every fisherman, I've got to tell you my best fishing story. Everybody's got a fish story, right? The big one that got away. Well, my best fish story is about the big one that did not get away. She's my beautiful wife, Christelle. She just recently, in the last month, got her master's degree as a nurse educator, and she's an RN. And God truly blessed me when he brought her into my life. She's just such a, not only beautiful on the outside, but inside as well. And we have two beautiful children. The good Lord has blessed us with two little girls, a 6-year-old and a 2-year-old. My friends see the picture of my family and they're like, oh my God, you got more guts than brains. I can't believe how young your kids are. But listen, I wouldn't change a thing. I love those kids. They're my whole life. Enough about me. Let's get into it, because I'm excited to tell you about the big updates that are coming. This is really my favorite slide of this presentation because the genesis of the AI auto trader was really our lack of consistency as traders. You see, it's reassuring to know. I've answered the phones here at Right Line for 12 years now. And if anybody's ever called here in the last 12 years, it was probably me who picked up the phone. And it's nice to listen to other traders that share in the same problems, the same issues that I do. You know, I thought I was alone. I read one of the messages here while Jeremy, brilliant guy, Jeremy and Zach from Shark, somebody had put, yeah, I have emotional issues when I trade. And I was like, oh my God, that's me. You know, and you know, you think of a grown man saying his emotional issues, you don't think of, you know, emotional issues like trading. You think of some crazy guy on the side of the road, you know, that's, you know, hooked on alcohol or something. But listen, emotions really get in our way as traders. And it's important to know that the vast majority of traders suffer from these emotional issues, okay? That it's a very small percentage of those that don't. In fact, I was right here on Trader's Corner. I listened to a gentleman, his name was Christopher Mullen, and he had done a study on human personality traits and whether or not these core personality traits lend well to being a good disciplined trader. What he found in the course of his study was that only maybe 1 or 2 lend well. These core personality traits, there's about a dozen. Only 1 or 2 lend well to being a good disciplined trader. Okay, so listen, if you suffer from human emotions, you jump out of trades too fast, you squeeze your stop, you're not alone. In my slide, this nice, beautiful woman has slowly watched her trading account dwindle to nothing. And she's come to a boiling point. She's bursting at the seams. She looks like a professional, a very nice woman. I don't see any body piercings or tattoos on her face. And it looks like she's in a professional building in a business suit. But now she's resorted to taking the old sledgehammer out of the bottom drawer, and she's ready to smash a hole through that monitor. Ever been there? I know I have. And that's the emotion that I'm talking about. That will cause us to make very bad decisions when it comes to trading. So those emotional decisions, really, they're part of our personalities. We may have bought indicators that lack price or lack a proven trading methodology, but it all leads to the same terrible place of blowing out our trading accounts. So it has been our team, my team's commitment to bring this to an end. You see, we've narrowed it down to 2 things that we believe are going to create trading success. Number 1, because we suffer from these human emotional errors, and listen, the very definition of insanity, you know it, is doing the same thing again and again and again and expecting a different result. After I blew out the 50th trading account and prop account, I said, you know what? I'm just not a good trader, and it's humbling because I had moments of glory that I had strung 2 weeks or 3 weeks together, and I thought I had finally turned the corner on my trading career, only to be extremely disappointed come the very next week. So ideally, because we suffer from these human emotions, we need software that can automatically get us in and out of these trades in a fast-moving, news-driven market. Now, number 2, and I kind of flipped the script here. I made number 2 number 1, but number 2 is it can't be just any automated system. The elephant in the room when you talk about bots is what happened to all of those bots we bought in the past that just didn't work, right? The big knock on bots has always been Well, sooner or later, the inputs, the parameters, my settings, they get stale, or they may only work in certain market conditions. Or, you know, I have to continuously optimize the inputs and do back testing and use my strategy analyzer, and it's a full-time job. Well, listen, that has been the game changer with this AI automation. If you've been living under a rock and you don't know, we happen to be in the midst of an AI revolution. Every sector of our economy is leveraging this new technology, and it's making everything more efficient. It's able to crunch a tremendous amount of data in seconds and spit out answers like we never dreamed possible. Just to name a few sectors that are currently using AI, you have energy, agriculture, education, transportation and logistics, retail and e-commerce. Did you know that over 95% of large institutions, I'm talking about hedge funds and investment firms, are trading with AI leveraged algos? You know, they're not just clicking a mouse and waiting for a setup. They've got it hooked up to very powerful algos that are leveraging AI. Now, finance is number two. The number one sector in our economy using AI the most, and I'm very encouraged by it, is healthcare. Healthcare is number one. Let's pray that they find some cures to some of these diseases. So the main benefits of using our AI auto trader, well, number one, it eliminates human error. And my goodness, you know, I call it slipping on a banana peel. How many banana peels have we slipped on? You know, and make these mistakes in a fast-moving market, on a platform that we're sometimes not 100% familiar with, where maybe sometimes it's even lagging price and we don't even know it. And all of those nuances that go along with trading make it much more difficult to be consistent. Anyway, the benefits of using this AI, it eliminates human error. It's the 4 benefits that I'm going to cover today are, we have what is called the dynamically adjusting or dynamically optimizing bots. That's how we're leveraging artificial intelligence in our bots. What we're doing, our mandate as software developers of these strategies is not necessarily to get you into every winning trade. More importantly, it's to be able to sidestep the losers. Well, how do we do that? We do it and we leverage AI in 4 different ways. And I'm going to briefly go over those 4 ways. I'm going to tell you where we're headed because we have a huge update coming next week. And then I have a very special offer, a great opportunity to give it a try and join us come Monday morning. So let's keep moving. If you're a prop trader, stick around. We've got prop trading templates that are designed specifically to trade evaluations. And once we pass the evaluation, we have other templates that are perfect for sustaining and maintaining that funded account, or those PA accounts, with templates that are specifically designed to be a lot more conservative. So the 4 ways that we're currently leveraging AI, and I always like to bring up a strategy to show you in real life. And what I'm going to do is I'm actually going to show you a trade so you could see how this system manages these positions. You know, a lot of you, I noticed when Jeremy, just in the last presentation, he asked a lot of you what was the most important, and he had number 1, 2, 3, and 4. And I think 98% of you put number 3, which was manage the trades, trade management. And my God, are you right? And this is for trade management. Man, wait until you see what we've done with this. It's really incredible. But let me start with the 4 ways that we're leveraging AI. Number 1 is we use what we call a bot and a drone. Okay, I don't want to confuse anybody, but the bot and the drone are really 2 bots. The drone is just another name for a bot. The bot and the drone, 2 bots that work as a team. Okay, the drone is just what it sounds like. Its only job is to collect intel, collect data. How does it do that? You think of a drone, you think of an aircraft hovering above the environment, above a landscape, and it's getting a bird's eye view. It's at a vantage point high up above that allows it to get a bird's eye view of the entire landscape. And it can send down pictures with a camera, giving the person standing on the ground an advantage of to see the entire territory. Okay, that's what this drone is doing for our bots. Okay, the drone is going to run 23 hours a day. It's not going to trade. It's never going to hold a position during the session break. From 5 p.m. Eastern to 6 p.m. Eastern, the market closes Monday through Friday. And we're never going to hold a position through that time. But the drone is going to trade through those other 23 hours. It's going to trade through the Asian session, through the London session, through the New York Stock Exchange, and all 24 hours. And what is it going to do? It's going to share a database with the bot, and it's going to tell the bot what times of the day historically it performs the best. Okay, so the bot is going to dynamically change its trading hours during the times of the day that it is the most profitable and consistent. This is the first way that we're starting to filter out some of our losing trades. Okay, number 2, it's going to choose the trigger. What do I mean by choose the trigger? Now, I always get a question, hey, can I set it and forget it? I have a small account, I have this size account. In the strategy parameters, you could put your daily loss limit. In this example, I'll put 500, and you could put a daily profit target, and I could put $1,000. I like to make it a 2-to-1 personally. I always like my winning days to be bigger than my losing days. And if you're a prop trader, we have a trailing threshold where if you only want to lose 500 and you go up 750 and then you give back 500, so now you're plus 250, it's going to cease to trade if you have that checked off. So we have this daily loss limit and daily profit target. Once either one of those has been reached, either per strategy or per account, the bots will cease to trade. They'll no longer trade. So the second way that we're using AI in this machine learning algorithm is we have 4 triggers, and the trigger is important too. The triggers to get that is the spark that lights the fire. The triggers, this system has 4 ways that it will trigger a trade. This machine learning algorithm is going to learn in what trading environment which trigger works the best. In a choppy trend, in a choppy ranging market, or a market that's volatile, or a market that's trending in one direction, it's going to learn which signal to trade and only trade that signal. Okay, this is the second way that we're able to filter out a vast number of losing trades. Then we get to trade management, which is huge, maybe even more important than the trigger, is how we manage the trades once we get in them. Let me tell you something. We've got some stuff that's going to blow your mind, and this is the video I'm about to show you. Our biggest downfall as futures traders, let me put myself right on front row, right on Front Street. My biggest problem, and I've spoken to some of you, and I know you suffer from it too, is we cut our winners short, right? We're so happy to get a winning trade. We see our P&L. I see my P&L go up $200-300, and I bail out of that trade as quick as I can, and I'm happy. But what it does is it makes our losers bigger than our winners, right? And now we have to have a win rate that's just impossible to keep up with. So it's so important to let our winners run over the course of a week, over a month, over a quarter, over the year. It makes such a tremendous difference in the trajectory of our equity curve, okay? So what we've done, check this out, is in this ATM strategy, we hard-coded the ATM right into the parameters of these bots. So my stop loss is at 60 ticks. In this example, this is a NASDAQ strategy, and the video I'm about to bring up is a trade taken on the NASDAQ. You know the NASDAQ is $5 a tick, and if you're risking 60 ticks, you're risking $300 on the trade. My profit goal, my profit target initially, okay, starts at 100 ticks. Now I can put in just a straight trailing stop and trail it by 50 ticks, you know, which isn't that, you know, sometimes it's effective and it's nice to have, but we can also do a break even plus or minus. Say on my first target, once I get 60 ticks, I want to take 20 ticks of profit. I want to go to plus 20. I always have that ability to take a leg of profit once I've gone a certain distance. That's our break even plus or minus. Then we have what's called our profit window. The profit window is set at 25. What that means is my profit target is 100. Once price goes to plus 75, that means I've just reached, I'm 25 ticks from my profit target. I'm at plus 75, and I've just gotten into my profit window. What happens when I'm in my profit window is my stop flies up and it locks in. It comes 25 ticks behind price. Remember, my price now is at plus 75. So my stop goes to plus 50 and my profit target is at 100. So I have a bracket now with price being right in the middle. And now we've integrated what we call our leapfrog. The leapfrog will leap that bracket as the trade matures and continue to lock in profits in a trending market or a trade that's maturing nicely. And I want to show you this in action. Let me set up the trade. What's happened in this session, and remember, we trade this every morning on YouTube. In this particular session, I'm using a trade copier, a great trade copier from Affordable Indicators. Joe Wise is really amazing. But this trade copier, I'm using it to trade 3 PA accounts. When you use multiple accounts, a copier I found is seamless. It's very quick and easy. It gives you the chance to 3x or 5x or up to 20x your winnings. It could be a double-edged sword because it'll 3x or 5x or 20x are losers. Okay, so it works both ways. But in this example, you could see my realized gains are minus 320. I've just taken a losing trade. I got a few ticks of slippage on the exit because I had a 60 tick stop. So I'm down 320 across all 3 of my accounts. Okay, so I know my risk tolerance. If I take one more loser, I'm done for the day. I can't take another loser. So let me play the tape. I'm down 1 trade, 320. Now, this is the advantage that this leapfrog does. You can see that right now, price is coming up to my profit target. My stop is still at minus 60, and I'm going to play the tape and watch what happens. Now, price came into my profit window and came up, and it locked in a couple $100 of profit. And my profit target jumped up and leapfrogged. Now, what's going to happen as this trade matures up, you're going to see both my stop and my profit target leapfrog ahead as the trade matures to the upside. Just leapfrogged. Now watch it again. It's going to actually leapfrog right off my screen. And I'm there praying to everything holy that trade keeps going. And this trade keeps going, and it keeps leapfrogging. And that one losing trade that I took earlier is completely erased with this winning trade. And I made enough to hit my daily profit target for the day. So I had a 2-to-1 risk to 2-to-1 really risk to reward on this, because the previous trade I lost 300. On this trade I made 600 across all 3 accounts. So that's the advantage of having this leapfrog, to allow your winners to run. Oh my God, is so important. And being as emotional of a trader as I am, that's my big downfall. And listen, I answer the phones here. I know I'm not alone. So that's the leapfrog integration that we've just added that makes such a tremendous difference on our risk to reward ratio. We also have a self-learning algorithm. We have a couple of other really nice features. We have our smart stops. Smart stop 3 is where we attach our stop to our 15 EMA, and it becomes a momentum-based trailing stop. So if the trade goes 50 or 60 ticks, in this example 60 ticks, I haven't quite gotten into my profit window, but what will happen is if it comes close, it's not going to allow it to come all the way back and give me a losing trade. Have you ever been up a few hundred or $200 or $300 and then boom, you get a full loser and you're like, oh my God, I wish I would have just closed that trade. Well, this protects you, protects your downside. We also have what we call our candlestick pattern recognition. Listen, these charts are very symmetrical and geometrical. Throughout the day, these candlesticks have patterns that repeat themselves again and again. And what happens is this machine learning algorithm will recognize the candlestick patterns that emerge, and it knows from past experience, from learning what happened in the past, when certain candlestick patterns happen, then they know a reaction is coming. To give you a perfect example is if you're in a long trade and the trade is maturing nicely to the upside, you're getting really nice bullish hammers, candles, and then all of a sudden you get this big, ugly, bearish engulfing candle. Well, the system is going to recognize that and immediately take profits because it recognizes that a reversal is coming. And then smart stop number 1 is if the trade is just overbought or oversold, and you're in another standard deviation above the mean, it's going to take profits before it retraces. Okay, so we have really very sophisticated ways that we're managing these trades. This shows you, this is an illustration of how the drone runs 23 hours a day. And it might, do well maybe from 9 to 11. And then after 11, it's hit or miss. It gets beat up pretty good. And then towards the closing bell, it does well again. Well, what does the bot do? The bot is only going to trade during the times that the drone does well. I always like to show you at least one real world example of this. And I'm going to do it really quick. Let's take a look at the leapfrog. This leapfrog, this is the E-mini that trades an 8 Unirenko. This is the drone in the month of September, from September 1st to the 27th to today. You can see that the drone is up $2,500. If I go to my bot, the bot is up $2,600, but you can see the drawdown on this one is $1,229. On this one, it's $3,000. Okay, so the P&L is about the same. The main difference is the drawdown, where one has $1,200 of drawdown, the other one had $3,000. If we look at our retirement plan, on the bot in the month of September, is up $1,793. It took $467 in drawdown. It only took 16 trades with a 56% win rate. But look at our winners. Our winners averaged 393, and our losers averaged 249. So with a win rate of only 56%, okay, 56%, we've got this beautiful equity curve, $1,800 in profits. If we look at our drone that's running 23 hours, we took almost $5,000 in losing trades. Okay, big difference. If you're trading a $50,000 account with a prop firm, you're dead and gone. It's gone. You blew it. You breached it. So this bot drone tandem can make a lemon into lemonade. Okay, it makes it that much more efficient on the output. The output becomes that much more efficient. So the market with the profit targets and the stop loss, it's looking at the average true range of the market. That drone is recognizing, hey, are we in a trending market or are we in a ranging, choppy market? And based on the average true range, it's going to put your stop and your profit targets in the most ideal locations. Now, where are we headed? Where are we headed? Well, our new update that I'm really so proud of my team because it's really cutting edge. You know, I have a lot of respect for Jeremy and Zach, who preceded me, because what they're doing is cutting edge. It's thinking outside of the box. Okay, there's nobody else doing what they're doing, and I believe that I haven't seen what we're doing. I haven't seen another vendor do it. Something a little similar, but not exactly. Okay, where we're headed is this: we're building a ChatGPT agent. And really, it's a breakthrough in integration. It combines speed, automation, market intelligence. It doesn't react to price. The way it works is it seamlessly switches between reasoning and action. Okay, it runs 23 hours a day, and it's going to connect to outside websites. It's going to connect to your own database on NinjaTrader. It's going to, which is your historical trade performance, and it's going to provide continuous optimizations. And what it's going to do, it's going to provide you with an AI-powered sentiment analysis. It's going to refine the strategies and around-the-clock monitoring, exactly the way big institutions are doing it now. So what's coming is really going to be next generation. It's going to learn whether or not a news report or an earnings report was a beat or a miss. It's going to know the market sentiment from connecting to outside sources. It's going to give you in real time, dynamically put into motion ways that your bots are extremely intelligent, taking all of this context-aware logic and putting it into action. Now, it's not going to be a black box system. You're going to need the ChatGPT, and it's going to make in seconds from a news report or earnings release or picking up market sentiment from its connections. It's going to make suggestions on your ChatGPT. You can either say yes and click yes, and it's going to immediately put it into motion on your NinjaTrader, or you could say no, you know, or put it in sim, or we're going to give you a couple of different ways to gain confidence with it. Excuse me, because that's really, you know, when I run any bots, I'd like to build my confidence with it, and I love to learn the nuances, and I like to watch it trade, and I let it earn my trust and my confidence. And that's what we're doing with this because it's brand new and it's going to have its nuances as well. There is no perfect trading tool. We have tools that provide us with an edge, but nothing is perfect. So that's where we're headed, and we're really excited about releasing it. So let's talk about the numbers, because when it comes to automation, I think the numbers speak the loudest. That's really what most people look at. And, you know, as a vendor, most vendors would be pleased to have one bot that does well. We have many bots that do extremely well. We have a very diversified portfolio of strategies. We trade extremely liquid instruments, the futures index equities, the NASDAQ, the Dow, the E-mini. We've diversified into crude oil and gold, which may not be our most consistent bots in our portfolio. However, there are times when there's geopolitical unrest, when there's news reports that come out, when there's earnings reports that come out, there's times that gold and crude oil will become extremely volatile and active and provide us with incredible trading opportunities. So the bots that I'm going to show you are running on a number of different time frames and instruments. Our bread and butter here is the NASDAQ and the E-mini, okay? From April 1st to September 26th, we have a bot that one of our members collaborated with our team. His name is RJ. He's extremely intelligent. Some of our best ideas really come from our members, and we're not too proud to tell you that. Being a part of a community, there's power in numbers, and RJ is extremely intelligent. So this RJ bot that runs on a really big bar, 150 range, doesn't get caught in the whipsaw that a smaller bar on the NASDAQ might get caught up in. From April 1st to September 26th, the cumulative net profit trading one contract, okay, one contract, was about just under over $9,000. $9,000. You know, I always say, well, what have you done for me lately? Right? It was nice you made some money back in April, but what have you done this month? Right? So let's look. This is the real deal in real time. This isn't a hypothetical, a back test. My RJ drone this month is up $3,100, $3,000 in September alone. So what have you done for me lately? RJ's up over $3,000 trading just one contract. I always get asked, what's the drawdown? Well, the drawdown was $1,700. $1,700. $50,000 eval or $50,000 PA account. You're riding. You're looking good. Smelling like a rose. Let's go to the next one. The next one was the drone. From April, the first one was the bot. This one was the drone, is up 20,000. And then we have the ES30 Star. Robert, another member of ours, you know, we've been really the beneficiaries of a really great community. The ES30 Star, man, this is another one, red hot, red hot. From March 1st to September 26th, this bot was up $22,600. Listen, the gentleman who designed this bot for us, his name is Robert, and he went on a win streak with this bot. I'll show you. In about a 6-week period, this is right out of Discord. His name is Robert. He's in this niche. He's a professional. He's with another company in this industry. But his passion is trading these bots. He loves it. And he's great at optimizing them. Well, he optimized it. The backstory is hysterical. He optimized a strategy to run on the NASDAQ. Okay. By mistake, he ran it on the E-mini. And it turned out to be the best bot we've ever had since we developed bots. It totally by mistake, but this equity curve shows over the course of 6 months, this bot went on to win over $60,000 for Robert, which is the best results we've seen. He referred his family and friends, and he told me, he said, Rory, I've never, and I have 10 different bots from 10 different vendors, but I've never had a bot that I didn't have to optimize. He said, this is the only one that I've run, and I've never, not once, had to tweak the inputs. And that's really a testament to this AI technology. So what have you done for me lately? Let's look at that ES30 range. Excuse me just a second. Someone's at my my gate. So the ES30 range, what have you done for me lately? In September 1st to the 26th, yesterday, and I can click generate. It's, you know, I'm not, no games being played. This is genuine, okay? If I uncheck this, you'll see it'll go to 0. And let me go back to my ES30 range. Where is it? The bot, look what the bot is up. 5,400. Let's start with the drone. This bot is just incredible. The drone, the ES30 range drone, it's trading 23 hours a day, and its stops and profit targets are static, meaning they don't adjust, okay? Our bot is adjusting everything. It's adjusting the hours, the stops and the profits, the triggers, and it's making it that much more efficient via that powerful AI integration. So our drone, which is static, you could see the numbers. It wins 50% of its trades. Its average winning trade is $600. Its average losing trade is a little bit more. So if you win 50% of your trades, you're going to be on the losing end. It's a losing strategy. This bot took 52 trades and was losing $1,000. Now, if I go to my bot, that same exact period of time, but this one is optimizing its own inputs, look at the difference, okay? It's turned a lemon into lemonade. This bot is up $5,400. Its win rate went up to 62.5%. It only took 16 trades, not 50 or 56. And its winner, even more importantly, its winner averages $876. The average losing trade, $548. So with a 62% win rate, you have this type of P&L. Now that's the power of this AI integration. Okay, that's why our members are having so much success with this system. All right. And really, it's been a game changer in my trading career as well. I want to show you my PA accounts. Since January, if I go back since January to today, over 3 PA accounts, look at this consistency, $38,000 across 3 accounts, $38,000. So listen, I'm a habitual account blower, stop squeezer. If you could slip on a banana peel, I found it. If you drop the banana peel anywhere near my trading platform, I'll find it and slip on it. I guarantee it. I'm just a klutz when it comes to trading. So these numbers are just game-changing numbers. Prop traders, listen, we've got custom templates designed specifically to trade prop accounts. If you, we have what we call our one-day pass templates. Our one-day pass templates are going to go for an all-in-one trade. We can make it an all-in-2 trades. Some of them go for 2 trades, or some of them just 1. The win rate is going to be 33%. Okay, this is trading. You could lose 10 in a row. You could win 10 in a row. It's just how it works. I'm comfortable answering the phones here. Because I like to, because I answer the phones here, I like to under promise. Okay. I know that you're probably going to win more than 33%. Okay. If you use our top ones. But I'm comfortable in my own skin answering the phones here and telling you 32%, because if you buy 3 evaluation accounts, I'm very confident that 1 out of those 3 are going to become a funded account, okay? Or you, listen, that's a very aggressive strategy, and it's called our one-day pass. Once you pass the evaluation, we're going to pivot to a much more conservative strategy. That 38,000 I just showed you, my profit goal is 250 to 500 a day. There's many days with this leapfrog now that I exceed that, okay? But I've been very disciplined with it, and I practice capital preservation. I saw some of you had typed that in on the last presenter's Q&A. And capital preservation, oh my goodness. Listen, every account that we've blown as traders, when does it happen? It happens after we lose a few trades, right? After we lose a few trades, we don't stop. We want to win that money back, and we determined to win it back, and we revenge trade, and we overtrade, and we try to get it all back in one trade, and we do whatever we can humanly possible to try to win our money back, right? But that's where the trouble kicks in. So I'm very strict. If I lose $250 to $500 on these PA accounts, I've stopped, okay? And I've been very disciplined with it. A very common question. I'm not going to get to all the questions. I can see I've already gone over. If you do have a question, and I'm going to do my special offer here in just a moment, please put your name and your phone number in the chat box. I'll be happy to give you a call. Just give me a chance to get a drink of water. Give me about 10 or 15 minutes to catch my breath, and I'll do my best to answer any questions that you might have. A very common question is, hey, can I use will I get payouts, right? That's the most important question. Yes, members of our community and members of our team have all gotten payouts using these bots, okay? Using these bots. Very common question. Okay, I do see the questions. Give me just a second. I want to get to my special offer. Now, I have some testimonials. I don't want to bore you or put you to sleep. I've gone over my time, and I don't want to overstep my welcome here. I love Traders Corner, and they're very generous with their time with me. But we have members of our community that are doing extremely well. It's not just me that's making money with this system. Here's my special offer. This weekend, last weekend, for the $299 special, we have our AI auto trader. This is the full Monty, everybody. This includes everything. When I say this includes everything, what am I talking about? I'm talking about it includes the discretionary component, which is all of your chart indicators with chart templates for all of the instruments. It's going to include all of the strategy templates, the full portfolio. It's going to also include an add-on that normally is $16.99, which is our prop trading templates. If you're a prop trader, you're in the right place, okay? Our prop trading templates are included in this offer. So you're going to get everything. Our monthly membership, this system comes in 3 sizes, small, medium, and large. Whether you buy the small or the large, you're going to get everything. We're going to give you everything we can to help you succeed, okay? Believe it or not, we're one of the few vendors. There are vendors out there that really want you to win, and they want you to tell your family and friends about us, and that's us, okay? So the monthly membership, whereas normally $598, this weekend it's just $299. Listen, for $299, you're going to get a powerhouse, okay? You're going to trade it with us every morning on YouTube. You're going to have the whole portfolio of bots, and you're going to try something new. If you've gotten beaten up in the past, if you've bought a bot that just didn't work, if you've tried trading and you're just having trouble with consistency, please do yourself a favor, give this a shot, okay? The annual membership is a much better value. The annual membership is $19.99. Normally it's $29.98. Over the weekend, it's going to be $19.99. I think over the course of the year, It comes out to like $150 a month, if I'm not mistaken. But it's you pay it in one payment. It's $19.99 for the year. The lifetime is also cut in half this weekend. Instead of $49.99, it's going to be $29.99. Now I see in the corner of my eye the PayPal Pay Later. If you can qualify for PayPal credit, they will split this over 4 or 6 months with no interest. It's called Pay Later. Pay Later. Thank you, Ray. I really appreciate that. Ray, let me, I think that's quite, so the drone bots aren't used to copy trades from. Yes, they are. I use, good question, Ray. Out of the box, thank you. Out of the box, we have a special tool. Okay, we've made this so user-friendly. If you're not good at Ninja, don't be intimidated. We have great tech support. Our Trustpilot reviews are through the roof, and they all mention our customer service. We have great support. The support is not only for a white glove installation. This is ongoing support with our technicians and myself for trading, IT tech for tech support. We're going to coach you and we're going to help you. We're going to hold your hand. And even though it's fully automated, there is a little bit of a learning curve. Just like with any system, there's nuances that you'll have to learn. But I said all of that to answer Ray's question. Out of the box, we have a special tool that will build the workspace for you. With the click of a mouse, it's going to create a separate SIM account for each one of your bots and drones. What I do, Ray, is I use that SIM account as my leader account. I never touch my bots or drones. I let them accumulate data in the SIM account that they come out of the box in. On my trade copier, I'll use that SIM account as my leader account, my favorite bot, the bot that's performing the absolute best. I'm going to put that one on my leader account. And I'm going to make my followers my prop accounts, okay? You can also copy it to your live account. Great, Sandy, thank you. Sandy asks, can one manually adjust the stop? Listen, this is not a black box system. That's very important. And that's why these prop firms allow you to use these. These are called semi-automated strategies. They're really self-directed strategies. What I mean by self-directed is once the trade is triggered, number one, in order for the trade to trigger, the user, the trader, that's you and I, we have the ability to set our own conditions for the entries. Now, we have a team of professionals that does that for you, and then the system does it on its own, even better than us, believe it or not. But your question is, can you manually adjust the stop? Once the trade is triggered, the stop and profit target are projected on our charts. And at any time, we can drag our stop, we can move our profit target, we can adjust the width of our leapfrog bracket. If we want to give it more room, we can adjust that. Everything is adjustable on your chart and visible. Okay, so it's not in that context, I say it's not a black box system. Okay, you're always in control. Hi, Janice. Thanks for joining us. How does the bot know when to trade, the good trades? Janice, in the conditions of the strategy parameters, we have a really sophisticated indicator suite. And if you look at this trigger, let's say the B trigger, if I select a B trigger, I have all of these conditions that will make it the entries as conservative or aggressive as I want. It looks at market structure. It looks at areas of support and resistance. It looks at the market internals, the disparity between buyers and sellers. It looks at a number of different factors. All of these variables, when we have a confluence and all of them agree, you're going to get a trigger. And that's when the software has deemed that risk is at its lowest. to get a winning trade. That's how we deliver you these bots. That's a great question, Janice. Thank you for attending today. Absolutely, MJ. Yes. You're very welcome, Sandy. That's a really important question. Listen, I've talked to traders, believe it or not, that have bought bots, and they've been, you know, they have these high frequency traders. They have black box systems where you enable it and you basically you cross your fingers and toes, and you pray to the good Lord of trading that you win, but you have no control whatsoever. This is the polar opposite, Sandy. Okay. Now, if I don't get to your question, if I didn't get to your question because I'm out of time, please put your name and your number in the chat box. We have just a beautiful community in Discord. I wish I had more time to show it to you, but I want to end with this one message. And I'm also going to put a link for our YouTube live streams. I promised in the beginning of my presentation that I would share with you a link to our live streams. Every morning starting at 9:30, I go from 9:30 to 10:30, Mark Miller's from 10:30 to 11:30, and then David Wise trades his options from 11:30 to 12:30. I'm going to put in the chat box this link and invite you all, and I'm going to send you Monday morning an invitation, a link to join us on YouTube. It's MJ asked about the coupon code. If you go to our website at rightlinetrading.com, the coupon codes are embedded in the buttons this weekend. Okay. After the weekend, they won't be, but right now they are. What I mean by that, let me show you, MJ, is on our website, if you scroll down to trading systems, the second one over is the AI Auto Trader, our most powerful, most popular bot. And if you scroll down to where the pricing is, if it says $598 monthly, but if I was to click on it, it would come out to $299 because the coupon code's already applied. Okay, so don't worry. You'll automatically get it at checkout. So I want to end by saying this. Listen, if you've struggled in your trading career, you are not alone. Okay, I promise you. I've gone to bed at night talking to myself. You can ask my wife. You know, I worked for Right Line Trading, but I couldn't trade. I couldn't win at futures. I kept blowing my accounts time and time again, and I would go to bed talking to myself at night. It was so frustrating. These bots were an absolute turning point in my trading career, and I honestly believe that it can be for you too. Take me up on my offer, and we will prove it to you. Okay. I want to thank you again for joining me today, and I want to wish everybody a blessed weekend. I hope you're able to spend quality time with those that you care about the most. God bless you, everybody. Thank you for joining me. Thank you, Anthony.
Hey, thank you, Rory. A phenomenal close to a value-packed day. So thank you, Rory. Be sure to check out the chat for Rory's special offer link. That concludes our Roadmap to Trading Success Summit. On behalf of Traders Corner, thank you all for joining us today. We hope you're leaving with new tools, renewed confidence, and clear strategies to help you thrive in the markets ahead. Stay tuned for upcoming events, and until then, trade smart and stay disciplined. Have a great weekend. Thank you.